I didn't.
Emphasize impact, in fact. Emphasize impact, in fact, girl, you know I like that. Emphasize impact, in fact, girl, you know I like that. Emphasize impact, in fact, girl, you know I like that. Emphasize impact, Emphasize impact, girl, you know I like that.
Good morning, ladies and gentlemen. Welcome to another live stream. Are you having fun yet? Are you having fun yet? Let's get into it. Good morning, good morning. Good morning, Nova, Andre, T-Bone. What's up, Trader Joe? Good morning. You want that rocket ship? We'll try to bring it back today. Palm Tree, what's up? Lulu, good call. First target was hit for you? Nice. Nice. Daryl, Phillip, Zoran, DY. What's up, DY? What's up, Lord? RC, Luca, yo-ho. We're gonna get started. We'll look a quick look here at the market, see what's going on as the market settles itself around the lower weekly expected move. What's up, AM? What's up, Danny? Are we gonna get our faces ripped off to the upside today? Or are we gonna go down to that 5,000 level? So we're gonna map out some of those levels. We'll take a look at market net flow, see what's in store for us today. I tell you what, the market looks like it can rip our faces off to the upside. But, you know, we need some things on our side for that to happen. Let's get into it. All right. And take a look at the advances, declines of the S&P 100 just to kick it off. See how we are in a correlated state to the upside or downside, or we're just giving us nothing. Where are we here? Come on now. Boom, 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 boom. All right. We got 66 advancing stocks, 34 declining stocks in the S&P 100. The S&P 100, I look at this one because it's the largest market cap names in the S&P 500. Looks like UNH is the one that's rocking and rolling. Meta's up there. That's always a positive sign. COF, Capital One. So it looks like we're pretty positive here. Now, just because we're really positive, we started the market a little bit down today. Just understand that if the market were to turn around, you're going to see this. If it goes full-blown correlation to the downside, it could get pretty wild, pretty wicked quickly. As the market's kind of pressing itself up higher right here, we do have some liquidity overhead, okay? We do have people also stepping bids up, so it's a little bit chop right now. A little bit chop. We're at that lower weekly expected move. The daily expected move for the S&P 500 is 504.64. I added this in here too. This is the monthly expected move. This is the lower monthly expected move. So remember, it's April's 18th. Okay, so we have a lot of time left in this month. there are higher probabilities that we actually come back within the month-to-date expected move. It's not a guarantee, but I just want to call that out, that as we're down here into this kind of area where we have the NVIDIA gap, we're by 500, you know, a big psychological level, we're at the weekly expected move. I don't want to discredit that we can't crack lower, but just understand that we are currently trading in and around the lower monthly expected move. Let's take a look at some gamma. We're pulling right back now. NQ is pulling back into the opening range for the day. And as we're doing this, you can see we're going to anchor a VWAP to the swing low. Okay, it's currently holding. So you want to really kind of hold the swing low, anchor VWAP for the day. We can even anchor it for the day, right? Just to give us an idea where price is. You can see they're kind of by each other, and price is above it. So that's positive. You want to continue to hold that, but really you want to get above the opening range. This is just the first 30 seconds of trade. Okay, we're going to pull up the... Oh, which, by the way, Trader Joe, if you're still in here. Yeah, you probably are. I saw the tweet, but I haven't got to check out the tool yet. Just so you know. I've been slacking on a lot of things here lately. Just been... it's been hard to do anything, actually, with dad duty and stuff, man. In fact, I have to still go through all my emails and all this stuff. I've only been keeping up on like the immediate action stuff. S&P 500. We have some 0-date levels here at 5,000. They're still reaching out there. And then we have 5062. Those are the 0-date levels for the day that started off in the early trading session. So when I go out to 0-date, 5,000 right here. 5020 is starting to grow a little bit bigger. So 5020 is really kind of where we're at. So I'm going to go ahead and clone this up. I'm going to go clone. And I'm going to go settings. And I'm going to go 5020.
About 45 minutes into the trading session, the Dow more than 200 points. The S&P and NASDAQ have found their way into positive territory, and the Russell 2000 up about 0.4%. The dollar index remains up about 0.1%. And
then our call wall was up there at around 5060, starting to reach out a little bit further, though. So we'll keep an eye, see if anything really kind of adjusts and changes. But as it stands right now, and we have also that 5,000. So 5020 to about 5060 is the range. And it's not set in stone because there are some levels that are roughly the same size, but that's what we're looking at right now. Okay, 5050 right up here too is our local resistance. And you can see that it's been holding as support prior, and then it's holding as resistance. So this 5050, we're kind of just in and around here chopping through 5050. Gamma flip line. 5160. What does that mean? It means sellers beget selling, buying begets buying. You get much more volatile price swings. Coming into the economic calendar, what do we got going on today? We had some initial jobless claims. We got a Fed talk. Bostic at 8 a.m. He moved the market last time. We'll see if that happens again. Got some bill auctions. Tip auction. This is around 9 a.m. So
IMF urging increased spending by China on policies to boost supply.
Got some stuff taking place in the next 40 minutes or so of trade.
Frictions.
Thursday after the close, we got Netflix reporting earnings today. Before the open, we had Blackstone Group, TSM reported earnings, and Nokia. So let's take a look at TSM.
Dependent on anticipated Fed moves.
Trying to fill this liquidity up here. So I'm just taking a look, giving a good idea of what the market's doing today, and then we'll dive in a little bit deeper. So TSM looks like it got tagged to the downside today on its earnings move. Thanks, Venom. Thanks, Danny. Thanks, Metal Mikes. Thanks, James, for being here. Thanks, everybody. The David Hunter special. Watch and learn, baby. Watch and learn. The David Hunter special. Oh, sorry, Trader Joe. I just, yeah, no. I saw the tweet that you tweeted. You tweeted at me for the Anchor VWAPs. I want to check it out. I just haven't had any I just haven't found time to just really do anything yet. Even somebody reached out to me via email, and I just haven't been able to. It hasn't. I can't make it like top priority right now because it's just been just trying to figure out this whole thing with my child. It's like in and out of, we don't have any daycare or any help right now. Usually I have some help, but the help is away. Or it frees me up to do a little bit more extra stuff. But my plan is to obviously check it out and see what's good. Why was the David Hunter emoji required in the Discord? I think it might have been more of an accident because I was trying to get the burritos in there, Moonraker, because it made me clear some stuff out. So I have to like remove some other ones and then I can bring those ones back. Because I was also like, oh man, do I really want to delete these for all these burritos? Because I was the same way. I like the David Hunter one. I got to bring that back. Okay, let's take a look at some of the intermarket stuff at play right now, and then we'll get into the market a little bit more. I'm not in no rush today right now. I'm never in really a rush, so. Just so you know, like, I have a trade on right now, but I've had it on since last night. Literally at like 4 o'clock Pacific Standard Time. I just left it on for a potential bounce play. I played just one micro contract, so M2K, which is a micro E-mini for Russell.
I bought a IBTA now indicating between 100 to 105, priced at 88.
I don't even know if I'm up on it. Let me see. I'm up on it, yeah.
Hansen saying the positive trend in inflation has continued and strengthened since.
Okay, so gold is still holding strong, man. We're just a couple, just like literally just separated from the all-time highs, not by far. So we have gold that's up. Let's take a look at copper. Copper's a new, oh my gosh, man, look at this thing go. Holy macaronis. Copper at new highs, gold at new high, or just about new highs. Crude oil took a back seat yesterday. Let's see what it's doing today. So this one, so nice consolidation. Then we had a little bit of a crack yesterday. Some follow through today. A little bit of a little step in there, but it's still, I mean, it's still a higher low.
Indicating between 22
still a higher low.
Priced at 21.
Okay. Let's take a look at TNX CGI. The 10-year yield is still floating right around highs for 2024. Man. All right. It's a very weird tape. The dollar off a little bit yesterday, but it looks like it's just consolidating today. Very interesting tape, man. You see the dollars at like roughly around the highs of the day so far. Gold is up there. You have inflationary assets doing well. Minus oil is down slightly on the day. A very, very weird mixed tape. And this is like the environment. I mean, some people call it like a war tape. That's why we call it, before we had the news actually about the missile attack in Iran and Israel, we were talking about on the live stream. And even prior to that, it's not good to see assets move like this, because when you see assets move like this, in fact, this is the same exact thing that would happen prior. I should go find my LinkedIn post, because I remember drawing up a post and I said all these things that were taking place looks like we're going to get some sort of big news event. It's like a war tape is what has been called prior. And now I don't know if anything bigger is going to come from it or what's going to be the case. It's just very weird to see these global, very important economic assets move the way that they're moving.
Raising quarterly dividend 1.5%.
But yeah, we're all focused on Nvidia, right?
Delta Golf,
Nvidia go up. So the environment currently as it stands right now, as I'm looking at this, market's kind of just, I like how we're getting supportive bids underneath this stuff, but we still have this overhead supply. All right. So S&P 500, we're below a declining 5-day moving average. We're in negative gamma territory. This is the environment where you get a lot of stuff like this, right? You see this nice little consolidation, little trend break, boom, and then you get these fake out moves. And then maybe it comes back, maybe it doesn't. But this happens constantly in this environment. Look at Microsoft. Microsoft broke out here, didn't consolidate nicely here, and we have followed through to the downside. Doesn't mean that it can't come back and reset up, but when we're in this environment, you get a lot of beautiful setups, and then they get faded. Whether you get faked out. I want to take a look at Lulu, because I did have a position in Lulu. Nice. Give me a second here. I just want to actually... So I took a little position in Lulu. And I would like to... Okay. I'll kind of walk you through my thought process here. before we get into like some sort of like more.
Look at the weekly natural gas inventory.
Hey Joe,
data.
missed you too, dude.
Between plus 43 and plus
Sorry, I couldn't make one. I couldn't put out a video. Good morning, Room, and good morning, Mr. Live. Good morning, Corn. Steve. Corn, where do I trade commodities? I don't really trade the commodities. I mean, sometimes I buy like various commodities via equity, but I haven't really traded like the future commodities. It's just not my comfort zone. But I do watch them from an intermarket standpoint. So I'm looking at Lulu, and you know, I'm up about 5% on the position or so. And I know I'm well aware this is a downtrend, right? So this is a downtrend. The price action got very tight here. I did a speculative early entry, and I entered a little bit more in on the breakout, and we're getting some follow through. I can definitely hold a position, but I would have to update my stop, right? I'd have to update my stop is still currently down here. I didn't even update it the other day. But you got to understand, it's in a downtrend, right? It's in a downtrend. So when I take these trades, they're typically smaller positions, and I had to be more aggressive because now we have to see if it pulls back and puts in a higher low. And I'd rather just not have it go like this, you know? I'd like it to go like this. But you know, being up 5% in a position, it's usually the time where I remove like about a third off, right around there. So I'm gonna cut about a third off. For anybody that may have, we've been talking about Lulu now for a couple of days, so I feel like some people may or may not be interested in that. The volume point of control is about $5 higher. Yeah, about $5 higher, and I can see it coming up there. Getting a little bit frothy right there. So yeah, I'm just gonna go ahead and just trim a third out. Lock it in, baby. Okay. I just want to check out FDX now too, because I was looking at FedEx. Okay, yeah, no, this FedEx is still slugging around. So this is why, like you get some great setups, but well, this one didn't really actually fail, I shouldn't say. But this was a nice inside trading day, and I did a speculative entry here, and I got stopped out the next day on this day because it crossed through the low and didn't cross through the high. So I did an early entry, and I was going to enter more if it was the case. But since then, you can see we followed through to the downside. Today we have an inside trading day. Now I don't know if it's going to crack the low or crack the high yet, but this right now, as you can see, it's still very tight. So maybe come today, maybe tomorrow, if we can get above the high of today, maybe I would consider a small position again. This one's maybe. As we're coming into this gap fill, we had a powerful earnings move, that was a powerful earnings gap right there. And it's been kind of just fading, but you can look at the volume. The volume has been kind of dying off here too. Some of the down days though have been having a little bit higher volume, but now the volume's kind of drying up. Price action's getting a little bit tighter. So these are the cases where, okay, maybe we crack up to the upside, or it cracks the low and then comes right back down to like the 50-day, 200-day, around that area, and then we have to, and then it kind of invalidates this more bullish setup, and then you have to kind of wait and see from that point. It's like AMD. AMD did the same thing, right? AMD was looking very tight, but you had to respect it if it broke down. You have this big bar consolidated, right? Big bar on big volume, went sideways, and then it broke. So then it even throws up more warning sign. And then here we say, you know, if it breaks above the high, maybe that gives you that opportunity. But it broke above the low, and then it flushes with even more volume. You see what I'm saying? So that's why it's in these environments. I think it's important to be, if you're gonna be speculative in early entry, it's very important to hone in on your position sizing, because you don't want to get caught in this type of stuff.
They have to remain cautious after the potential first rate cut.
Yep, TNX up, gold up, dollar up again. This is
Really
all
like a rate cut in June.
not the greatest look, but the market's already sold off pretty heavy. Now, it's very common, right? When we started seeing this move yesterday,
The Fed is
I wasn't live, but
it will give limited
I was posting every once in a while on the Discord and on Twitter. Somebody had mentioned like, oh, you know, can it go retest the lows in the Discord? And the response to that is it's very, very common. It's very is more like right here, and then we saw this rep. It's very common to trade back down to the lower weekly expected move. This is like the happy place for the market. Okay, the happy place for the market. Now, if we start breaking lower, you're going to have some serious hedging activity. And that you would see on like a 1 minute chart. You'll see the volume explode and price will just unwind. If we're looking at like the S&P 500 and you're thinking of in terms of like, hey, you know, what about CTAs? You know, let's go context. Let's look at SPX CTAs. You can see the CTAs, which is commodity trading advisors, just think of them, they're algorithms, momentum traders. If you get this downward convexity, it means more sell side occurs, right? You're seeing them come off a little bit. It's been at highs. We've been talking about how high it's been. And when you start breaking some levels, like you don't never know exact levels. The estimates from Gamma Labs and some various other like tier one, they've been saying like they're estimating you know 50 was like a trigger point for some CTAs. Okay? And you could see some more intense selling, and we kind of saw that yesterday as the market rallied and they redumped into it. Well, now it's looking more towards 5,000. If we get under 5,000, that could trigger some more, not just sell side, but potentially CTAs to start beginning selling more into that. And if that's the case, you got to be very careful on the rips up because they could dump right into it. We saw a weird move yesterday, actually. It could have been on some weird news, but you saw this big strong move. It was very aggressive. It was so weird. It literally came out of nowhere and just went foof, flyered off, and then it just reverted. So it could have been something somebody said, something, but that move, there was they took advantage of that. It was faded very quickly. Let's take a look at market net flow. So market net flow, we have a bearish divergence, not a good sign. No convergence, so you get the counter trend moves. And what are we doing since we kind of lost convergence right here? The market is kind of doing that counter move. But despite it being bearish, divergence, there's no convergence with this. So it could equal chop. All right. It'd be better if you want a face rip and rally, you'd want the green line above the red line and so forth. And then you want this to turn green. If that was the case, I'd be geared up for a nice rally right now. It's not the case right now, but it doesn't mean it can't change. I got to recheck in onto my my position here. So like I said, I have one micro on of Ruddy, which is M2K, M4, M2K. I put it on at like 1965.1.
The weekly.
So I'm up like 10 points on it or so, 10 bucks. So why did I put it on? Let me show you. I was just looking at the Ruddy last night and I saw this and I was like, dang, we literally just dumped straight into the 200-day moving average. And I was like, okay, I'm not going to put a full contract on there. I'm not going to put a mini. I'll just get a micro. So I just got a micro, which is the M2K.
No regional adjustments in the data.
And I'll just leave it on. I did it literally before even going to sleep at night. Because I figured that if we get a bounce up into this area, I mean, it make $100 or so. But if we started selling off, it'd be like, okay, well, whatever. You know, I wouldn't short down here. The only thing that I'd do on a fade trade like this would be buying a long position because it went straight down, right? So that's the only trade that I've had on technically, I guess, today, but I haven't actually executed anything other than taking some profits off of Lulu. My profit target is 1983. I'm kind of just want to take it off right now, to be honest. But
Haddad saying it's crucial that G20
we have you know, in 30 minutes we have some stuff coming out, right? Some 30 minutes or so. Fed boss stick in 30 minutes. I just don't feel like getting caught up in anything, whether that's to the upside or downside. Okay, so let's look at the Bookmap again. This to me looks a little bit better than like it did in prior trading sessions. so far. Doesn't mean it can't change, but so what I mean by better is we're moving up into these kind of, you know, areas of liquidity, but as we're moving up, you actually see, you know, bids stepping up. In prior trading sessions on those really big down days, we were seeing the bounces take place and it was literally clear blue water beneath us. So as the market was pressing higher, it was like, okay, I mean, it looks like it's going for it, but if you're looking at Bookmap, there's nothing beneath us, right? You see them stepping right here. It doesn't mean that it can't come down and fill this to the downside. It doesn't mean that, but if this was just blue and clear blue waters, I'd be very hesitant because if sellers step into this, it could be a quick flush right back down. When you have some supportive bids, you know, it could still be a strong flush, but there's a higher probability that, you know, it's showing us that they're buyers that are pressing up, right? Pressing further and further up into this area of liquidity. So it's a little bit cleaner of a look. It's a little bit more bullish of a look than just emptiness beneath us, right? Emptiness. We're up about 0.34% so far for the day. We'll take a look. I'll take a look here at the chat here in a moment. I haven't taken a look yet. We can pull up some regular names or random names if you would like. The void, yeah, exactly. FRGE is an interesting one. Okay, I might be able to pull it up. I haven't heard of that name. I should take the trade off. Yeah, I might peel the ready trade because one of the reasons why I might peel it is because I can't sit here and focus on it too good. You're welcome, Scott. Thanks for being here, man. I can't. It's very hard to focus on a lot of that stuff. So as the S&P 500 is moving up in here, it's trying to absorb this liquidity overhead. And there's quite a bit of contracts, people. So if it doesn't get it, it's going to have to reset, refresh, and see what we go from there. In about, you know, less than 30 minutes, we have the Fed coming out. But you do have, like I said, stepping into this. It's just a little hesitant. You can see, take a look here very closely. You see as we're moving up, they're starting to actually add above us. You can see they're kind of stair-stepping down, adding liquidity there. Which means that sellers are very active right here. You know? Then they just did it again right here. It's a fight right now. Getting very tight. Now, if we break out, where do we go to? Let's take a look where else some liquidity is hiding out at. Oh, here we go. Me and I going for it. We have 5100, 5095 up in that area. And then 5150. 5150. That would be crazy. 5150. Did anybody get that? Any police officers in here? Okay, so that'd be to the upside if that was the case. We're trying to get here, trying to fill this liquidity, just not successful yet. Is AMD good for a quick rebound? We'll pull up AMD. We'll pull up a lot of these names here. Let's just reset. Take a look here at NQ. NQ is right now fighting with the upper, breaking out now of the upper, upper opening range right now. That is good. That is good sign. You want to see it hold. After the immediate sell-off here in the beginning, we've been holding the daily VWAP. Haven't really had a pullback, but we did have a nice consolidation. Okay. And as we're breaking up, we are seeing some decent volume on a very shorter time frame break out through here. We saw it here, we saw it here, and we're seeing it here right now. So NQ is rebounding. Now, as this is taking place, and we're seeing this little bullish move, 50-50 is still above us as far as the gamma level, and that has been that level that we just discussed prior in the episode where it's been prior support and prior resistance. Okay. Now, being that that is the case, you look at market net flow, And it's not giving us like a clear signal that it can just burst through that like nothing. So those resistance levels become a little bit more important. Okay. We're coming into and around that 50-50 as this is happening. And as we do, I'm so close to getting filled in my order here on, I think I might pull the plug on it if we get up to 50-50. And then I'll pull my ready plug. It's about, man, it's so close. I'm just going to cut it. I don't care if it goes a little bit higher. I'm going to go ahead and, oh no. No. Dude, talk about a lag time. Oh my gosh. Okay, now I'm out. I clicked the sell button and it didn't remove my order, so I clicked it again and then I went short. Fucking dude. Swear to gosh. Okay, that's fine. Well, that charged me commission. Awesome, dude. Pumped. Pumped for that. All right, we're coming right up to that level. There's the 50-50. So I got out basically right when that happened. Okay, so now my book is flat. I have a flat book here for day trading. Like I said, I didn't execute that trade today. I executed that trade last night. So we did fill that liquidity up here. You can see we got through it, and as we're going through it, you can see that they're still putting some supportive bids beneath us. So okay, so now does that make more sense as to why, like, okay, why this looked more bullish in the prior, if you were here on the prior trading sessions, right? And you saw these big red bars and we were walking through and we we're talking about, you know, the big blue water beneath us, how that differed and how it could look more bullish in this case than anything. Hopefully that made a little bit more sense for those that do use Bookmap or see it, you know, on occasion or whatever. Am I anticipating it'll flush? Good question. We'll take a look at Mara. Yeah, 50-50 could definitely repel. So yeah, as we're pulling into 50-50, this is kind of where, you know, this is where, you know, the prior support can become resistance, but more specifically, it's not just some support resistance line. This is an important gamma level that has been holding. And you can see as we're coming into it, it is pressing price away from it. Okay. Repelling price, pushing price away. And the further you get away, it can, you know, I'm not going to draw it out fully right now, but if this is the gamma line, you know, it gets more intense as you push through it. And then when it comes up into the gamma line, it kind of stabilizes. But then when it starts pushing back away, it can elevate, it can intensify as it presses from those levels. So I'd have to make a video on it. I just haven't had the time to really think. So you see, as we press price into it, right, it feels comfortable here, but then it starts moving down and it presses back down, you know, pretty quickly. So you really do want to get above 50-50, and then you could target the 0 date, which is 50-60. Okay, it doesn't mean it's game over right here, by any means. But the reason why I said watch that resistance is because we didn't have a clear sign here. Like it didn't say, hey, we're gonna burst through this and it's gonna be good. No, we had a red line above the green line, cumulative net premiums of puts, calls, bearish divergence, no convergence, which means that we can have a counter trend move, and we've been in that counter trend all day. Okay. So it's fine. We can have trend days like this. It's totally fine. But it's much, much, much stronger of a signal when you actually have convergence, because then you have the dealers at your back, and you're just kind of riding their wave, just flowing, like surfing their waves, you know. Now, if you're trying to, you know,
more from the Riksbank Johansson saying they're significantly more confident in inflation.
If this red line was like this, and this green line was like this, and you have this was, you know, all red like this, and you were trying to buy the dip, right? If you're trying to buy the dip, or like maybe buy some strength, you, in theory, what you're doing there, for an analogy, for the people that like analogies, because would be bearish divergence, bearish convergence. You would be trying to swim out to the ocean when there's, you know, a heavy like tide or whatever it's called, right? When the water's coming in, so or you're just swimming against a river, right? It's much easier to swim with the current of the river. You go a lot faster and further. But if you're trying to swim upstream, it's going to be a lot harder. And that's exactly what it would look like. This right here, it's no edge. So we don't need to spend too much time on it. There's no edge when it's like this. But we do know that if it's showing bearish and there's no convergence, you can have the opposite type of move. And that's what's going on right now, okay? We're a little bit off of the lower weekly expected move, but like I said, it is still very typical to trade around the weekly expected move. We have Fed Bostic coming out in 20 minutes. Who knows what that's going to bring? He's moved markets before. We'll see if that's the case this time. Daily expected move, 504.64, and we're still below the month to date. And we're below a declining 5-day moving average, okay? We'll pull up some of these names now. Put them back in the chat. I'll go back through history, but if you want to retype those in, let me know. We'll pull up some of these names. Okay. Okay, somebody's mentioning TLT. Interesting day yesterday with TLT. TLT was actually up on the day, which could be bullish for the markets, but it did seem like a more flight to safety, right? So bonds were up. Markets were kind of, you know, not down huge, but they were down. So it did seem like a flight to safety day. As far as like, you know, should you get down here? I mean, do you think the 10-year yield's going to, do you think bond yields are going to go higher? It's very hard to determine these type of setups. So if you just look at this from just from a trend perspective, all right, and ignore all the macro, it's still in a downtrend, right? All these averages, you know, 20 is stacked under the 50, under the 200. It's been trending down. And every time we got above the 200, what did we say? Because it was declining, we said it's bullish, but with caution. It got back above it. It's bullish, but with caution. It got above it, bullish, but with caution. Got above it, bullish, but with caution, right? And it constantly is following that trend. So, you know, if you're trying to catch a bottom, it's very difficult, right? You wait for things to tighten up, maybe, if that's the case, which we've seen this before. This was actually during the exact time where Barron's put out a magazine that everyone made fun of, where it says it's time to buy bonds. It's like perfect timing. And everyone's like, yeah, right. Gonna be wrong again, gonna be wrong again. And then it ripped to the upside and you didn't hear about it again. It's pretty funny. So now we're fading, obviously, fully back in a downtrend. So yeah, I think that there's opportunity. I think you can see these pops up as the 10-year yield takes a little bit of a breather. Sure. But is there better opportunities out there? Or how are you approaching this? Are you just doing it for the yield, you know, or the payout on it? And are you holding it for a long time? If you're holding it for a long term, hey, maybe there's an opportunity there. But right now it's in a poor trend. You know, you go out to weekly time frame. You know, you're forming a little bit of a, you know, reversal type candle here, a little bit of a hammer candle here, right, for the week. So yeah, maybe if we close around this area come Friday, maybe this is marking a pullback to a potential little bounce if we cross above the high. But weird too. I mean, okay, right back up to here. I mean, look at the 10-year yield and look at all these assets. Look at the 10-year yield and look at all these assets, right? They're not showing signs of slowing down right now. You know, not yet. They just keep pressing higher in this environment of potentially stickier inflation. And Powell was out the other day and he, you know, it was pretty hawkish comments for the most part, and the market responded not the greatest. So that's TLT. Do I trade commodities outside of ETFs? Not really. I'm not really much of a commodity trader. I think it's I have a hard enough time just making sure that I can implement my strategies and managing risk with just trading equities, you know. I'll trade some of them via ETFs, but that's outside of that. It's just not my specialty, right? Like, for example, if I trade gold, like I remember just buying gold coins, like that was my trade, or, you know, buying gold ETF, but I didn't buy like the futures. And if I did, it was a quick trade. Yeah, where is that black swan taking place? I don't know. Okay, thoughts on Tesla, and then I'm gonna go here into the other chat and we'll pull this up too. So T-Doc, yeah, a lot of these names, right? AMD, Tesla. All right, in order to pull up Tesla, you know the drill. We gotta hop in our Cybertruck. Okay, take a cruise. Okay, Tesla's getting hit again. Holy cacaronis. Okay, now this is actually interesting to me. So I'm gonna remove this because we're trying to identify a tightening up, and now it broke down.
Unicredit, concerns over risks of high turnover in top management at the Italian bank. Uniform Charlie Golf in Italy.
So this right here is a gap fill, okay? And we're kind of in this void. Let me remove that drawing. Okay, now, if I look at Tesla, it's a new low for the year.
Unicredit NECP.
Tesla just sucks, man. It just sucks this year. All right, we'll probably have some sort of crazy rip back at some point. But if you've been trying to time it here, like I know a lot of people got bullish there. I know a lot of people got bullish right here. But if you're not respecting the price action as it's going down, man, you can get hit. You can get hit hard just in 3-4 days. We're down almost 13%. So if you trade options, right, they go to zero. If you're trading spreads, that'll help you with risk a little bit. If you're trading the equities, just respect it with stop losses. But this has been kind of a quick sinking ship. Now it started to tighten up here at a nice area of support, but today it broke down. Just getting no love, man. No love. Probably more news. Earnings is around the corner. So establishing a new position is kind of hard. Like, okay, so the market, it could very well be discounting what's going to be coming place in as far as earnings. So yeah, maybe we get this huge gap up and gets on everyone's radar again. But are you going to take that? Are you going to take that chance? Are you going to just blindly enter in with a binary event that could take us next week down, you know, $15 per share? Maybe that's the case. But we are pulling into this prior area of support. We broke down, and then we're in this gap fill area right here too. So I think that there's opportunities to see bounces, but right, like so one of the things, like my buddy loved trading earnings, but I told him, and he also loves gambling. I told him, I was like, dude, you have no idea what's, like, he thought he was so smart for getting like 3 earning shots in a row and making good money. And then you get 2 wrong and you lose all of that. You get 1 wrong, you can lose all of that depending on your position size. Once again, if you're playing into earnings, this is, even if you, honestly, even if you're going up against the most concentrated area of analysis. This is the most, like, everyone focuses on the fundamentals of these companies. You're going up against Wall Street. You're going up against top tier analysts. You're going up against people that have insane models, and even they get it wrong. So what we have is, in my opinion, far more important than all of that, is we have an idea of what risk is going to be based off of the options implied volatility. They look at that too. I'd imagine if they don't, that's crazy. But I put big focus on that. And you really give up your edge. You give up your edge in a couple of ways, okay? You give up your edge trading into a macro event, or an economic event, I should say. So you give up your edge. If you were holding a position into a news event, you're giving up an edge. It's a binary event. You have no idea what's going to happen. I don't even care if you have the news. You still don't know how the market's going to digest it, because a word can be said in a weird way or context, or maybe it's missing a word, and you're going up against HFTs, high frequency traders, and algorithms, right? And it could take the market a different way, or it can stop you out and go the other way, right? That's typically what happens. And then 2, you're giving up your edge if you're trading up into an earnings event too. All right. So unfortunately, the problem here is people see the opportunity, they see the idea of making a lot of money fast, and then they kind of put the whole, like, hey, but I can lose money on the back burner. So the way that I would approach earnings is, if I have a position and I'm, like, for example, if I shorted this here and I'm still short and I'm going into earnings, now I'd be like, okay, now what's the risk? $14, whatever. Okay, am I okay holding my entire position if it comes back up here and I'm just up a little bit after holding it through all this time? And I go, not really. So what I'll do is I'll peel some of my profits off and maybe update my stop loss. And then I'm okay if it comes back up here, because I can potentially look for it to reset up. Okay, but if I say, oh yeah, if it comes up here, I'm okay with that. I'm okay, it's just one small position. And you know, if it comes up here and it goes to break even, that's okay. But if it comes down here, that'd be awesome. So then you just keep it as is. And you might say, okay, but if it comes down here, then I'm gonna cut. Okay, so that's kind of what I see there. Yep, we got Fed speaker in about 9 minutes, 10 minutes right now. Yep, Moonraker has it. Yeah, you can do strangles, I don't know, butterflies, iron condor, or like all kinds of different like events. You can trade. That's the thing. That's where options come into play. Is there's advanced option strategies that help with these type of moves because options were designed, but you know a lot of people don't use them for that. Options were designed to be a risk management tool. That's what options are for. They are a risk management tool. They could help you to manage risk in these markets. So if you're not utilizing them as that, you know, if you start focusing on them and really thinking of them as a risk management tool, you can you'll probably do really good. It might be slower pace, but you'll probably do much better. All right, let's take a look here. We back in the money? We back in the money. Are we moving? Where are we going? Where are we at? We're kind of just chopping around. Yeah, are we holding up at 50-50 still?
WABC.
Yeah, we're just right around 50-50, kind of just chopping around there.
Whiskey Alpha Bravo Charlie, EPS $1.37.
Market net flow still not giving us anything here. We do have, like, on the little up moves right here, I am noticing good volume. So just take a look here, the volume right here. So as we're kind of like pressing higher, it is nice seeing these big green bars. Be mindful that this is a very like small time chart. So, but it is more positive to see that. We're floating around that 50-50 marker once again. 50-50, it's not really the area where I'd initiate a trade, both from the short or long. But you are coming into this prior area right here where it acted as support and resistance. Above us would be 50-60. That would be the level to watch if we start moving higher. Why? Let's take a look at 0 to 8, see what's changed there, and see if it's still prominent. 50-60 is right here, but traders are reaching out further. So now to 50-80, we can add that line in. Clone. Bostic in a few moments. So 50-80 is up here. Just so you know, traders are reaching up here. It's not just me saying that. The traders are actually reaching up there. So some people might like not look at gamma and they'd be like, okay, but there's a potential area of resistance. Well, now you can align it with some 0 date. You know, as price was moving up here, traders started reaching up further. Volume's drying up a little bit. And this could simply be because we're coming into a... So when I'm looking at this right now, like I can probably draw out my ranges for the day of where we're probably going to trade. I prefer to hear Bostic speak and see if anything changes from that point. But you got a range here. You got a pretty decent range here. Give me a second here. Oh, brother. My wife just sent me a video of my child in a one of those little things where you can walk around in. He was standing up the other day by himself. It was weird. He's like 7 months old. I don't know how the heck's even possible. And now he's walking in it and he's reaching for the cupboards to open them. God, we have way too many cabinets. I do not want to put on little childlikes on all these cabinets. But he will literally get lost in a cabinet if he starts crawling in these. Literally, we'll play hide and seek and we'll never find him. Way too many cupboards. Hey, what's up? Wait, I just saw Quantum in here. Hey, Quantum, I just saw a message from you, but now it went away. I was just going to read it. Maybe editing it or something. Maybe I'm just, my brain is playing with me. Maybe I didn't see it. Hey, what's up, Gianni? Lost in Narnia. Yeah, I saw it in here. Quantum, what's up, man? If you're in here, Quantum's been following me for a while. I remember seeing his comment a long time ago in my YouTube channel. Been a long time trader, from my understanding. We're moving up into that 50-60 right here as we're about 4 minutes into Bostic coming out. Still no nothing there from this perspective, but we did have, like we said, the traders started reaching out higher on a 0 day perspective. Oh, shoot, I'm still in my Tesla. You guys gotta tell me when I'm still in my Tesla. Forgot. I always forget. Oh, hey, what's up, Quantum? There you are. Disappeared. Long the Dow, waiting to long the NQ. Nice. Nice, nice, nice. Yeah, we could be getting our face ripper today. Could be getting it. I may or may not be done for the trading session so far. I'm up on the day, made a little bit of money, like 65 bucks. Across a lot of accounts. I know the people are like, you only made 65 bucks? Made more on my Lulu trade. Three minutes, SNL voice. Yeah, we got 3 minutes left. Coming into around 5,100 where we have some liquidity being added overhead. But look at still, we have people stepping in here. So it's still, we have still supportive bids coming up. It's not a clear blue ocean beneath us. They're stepping in kind of heavy right here. This makes sense. This is happening as we're moving into Fed Bostic. So, you know, it is what it is there. But you see that, how they just started kind of heating up over there? You can see they're lighting it up right now. Not by much. Not by much, but it just coming into this event. You literally see a walking price. But we still have little buyers down beneath us. Much better looking tape than the prior days, at least for now.
For the U.S. Treasury announcement for this next week, coupon and bill supply, we're going to see 257 and 2-year floating rate note announcement, along with a 3- and 6-month bill.
Yeah, Ruben, I don't think $50, 60 bucks here and there is enough for be a full-time like to live off of.
Supply, and then we'll raise $73 billion.
But let me be very clear: the $65 is across 20 accounts. It's $1,300. And then my Lulu trade, you know, was probably about 400 or 500 locked in. But I don't really use that income in that account. I'll use it from this one when I can actually qualify for my payout. Because who knows, I might not qualify for whatever reason. The other day, my Tradeovate account locked me out, and dude, tore me to shreds because an order was filled on the move down, and I couldn't get back in to remove it. Luckily, it wasn't on all my accounts. But that was some crud. Literally happened here on a live stream. Both my accounts for some reason. And then the support ticket was like, I sent them screenshots of it because it said something about an API. The request could not go through. Contact support. I'm like, dude, this is shady. It's so shady. So now I'm just like trading one micro. Because if it happens and I'm like, okay, I can, you know. Payout. Okay, so Ruben, what I mean by qualify for a payout is it's a prop firm. So I'm not trading my money. And you have to pass their rules and restrictions and all their stuff, which is very difficult to do. It's fairly new to me, the whole prop firm thing. So I trade my accounts. I put more focus there in my swing trading accounts. I put more focus in my swing trading accounts. Like, for example, all the way through September, and I'll show you why. Let's go up to SPX. While Bosix is coming out now, watch the market reaction. I started getting much more involved in swing trading. Pretty much I was flat for this year. I didn't trade much here. I got more involved right here. Why? There are various different reasons. But when I started focusing more on swing trading here, given the context, because we started going into positive gamma territory and we're above a rising 5-day moving average. So when that's the case, my focus and attention goes to swing trading, because breakouts tend to work better. I look at the setups, and it just I've always felt it easier to make money, you know, less friction to trade my breakout strategy when we're in positive market conditions like that. Now, when it changes, I focus more on day trading. And this time around, I'm not focusing on day trading the other personal accounts. I brought that money into just a savings rate. So I said, okay, I'll just trial and test out this prop firm thing and see if I can extract some money. And if I don't, what am I risking? few $1,000s here, a few $1,000s here of setting up accounts, maybe. Because I didn't try on the evaluations. The evaluations, to me, on some of these prop firms, I just do not care about. I do not care. I'll just throw my money in and I'll just wait until I get it hit a home run, and then I'll qualify. I'm not going to sit here and spend 7 days trying to qualify for an evaluation. Now, the reason why that is, because people will be like, no, why would you do that? Like, you're just wasting money. Okay, some of these things are like cost me $37 to do an evaluation, $37 or $50. Okay, that is this big compared to my trading, what I do on the other side. So I can miss 4 or 5 times, and that's like the size of, you know, not even one single trade that I typically take. And I'm like thinking to myself, I'm like, okay, if I get 1 out of 5 right on just a random throw, I can get a PA, and then I can take it more seriously, or what's it called, account. So that was the focus there. Now, if you don't have that kind of money, just kind of like, you know, and you want to take your time, it'd be smarter to do, for one. Give me a second here. I do have somebody coming in around 8 o'clock, maybe a little bit later, to fix my refrigerator.
Bank of England's green, saying UK supply side is more constrained than...
It's very different when it's funded, but to me, yeah, Scott, it's for me personally, like, it's not really worth it to be cautious during an evaluation. Unless if it requires that to get funded. And if it requires it, that means you have to do it, or they won't qualify you to be a funded account. So I do not care about it. Now, the risk management team probably cares about it.
Green also saying that there's some indication you can...
You know, if you ever want to go live to a live account. But if I really want to go to a live account with a prop firm, I just go live with my money. You know, at that point. I would take my funding out, and then I would go live personally. Yeah. A lot of confusion up in here. We still have some supported bids beneath us. We have overhead supply, kind of a choppy shape there. Market's kind of just chopping here. Maybe come back into the opening range here, and we're floating just above 50-50.
Saying monetary restraint is continuing to reduce inflation.
Got Bostic talking. We'll see if it sparks anything.
The real economy strongly. BW's green noting services inflation and wages are also elevated. The latest inflation data is surprising on the upside a little.
No, that's totally fine.
Green saying core services inflation is encouraging.
Question is, so how long should I be trading to qualify for a prop firm? I'd rather do it on my own money until I get a real good hang of it. Actually, to be honest, that's what's good about prop firms is you can go and you could set up an account for like $50 without using your own money, and you could get used to it there with your risking $50, because you can lose money in futures. If you're trading futures, you can lose it literally very quickly if you don't know what you're doing. Like, you got to understand some stuff as far as like the roles, you know, and these prop firms, they have the rules in place. You don't understand like the ticks and how much each tick value is worth. You got to understand there's micros, there's minis, you know, there's all kinds of different future products you can trade. What's more liquid? When's it open? When's it close? And if you're approaching the futures market with your own money and you've never traded futures before, you know, it could be an expensive learning curve, right? It could be an expensive education. And sometimes those expensive educations pay out big time, but you can learn it in paper trading. You could learn it spending $30 on an evaluation, and who cares if you blow it up? But don't have high expectations when it comes to the prop firms, you know, because they're opening up like yogurt shops right now. So go to ones that have been around for a while, that have history of payouts, history of returning people's, you know, what's it called, and read through their FAQs. Some of them are very shady. Like, if you just leave an open order and you forget about closing it out, they'll close your accounts. Like, even if it's so crazy to me that some of them do that. They don't just flatten your account and get out. No, they use that to kill your account. It's just gross, man. And you got to understand, how are these prop firms making money if they're not really giving you live money? If it's virtual funds, they're on the back of traders that are just can't make money, and they're very, they make a lot of money doing it. That's why there's a new prop firm opening up every day. It's not easy. You're using FTMO? I thought FTMO went under, Craig. Or is that something else? Or maybe are you not in America? Didn't they stop like trading in America? Or maybe I'm getting confused with somebody. Or maybe they went away for a little bit and they came back. I don't know. 10 years is a long time, man. Yeah, 10 years is good for a prop firm.
2% target.
It's great. I think the Fivers have been like established since a while too. It's more pricey to make the challenge there, yeah. I think there's so many of them, man. There's so many of them, and I can't really recommend any. I mean, the ones that I feel a little bit more comfortable with as of right now, which who knows what can happen, it would be like Top Step. They seem legit. Their rules seem legit, and then Apex. I'm still a little shaky on them. I'm trading them. I'm using them right now, but something's always off. Something always doesn't make much sense. Like they closed out my 20 accounts the other day because all of a sudden I needed to be verified and I couldn't get a hold of anybody. And then all of a sudden they opened my accounts back up again. I'm like, that was weird. They literally blocked me out of everything. I couldn't see anything. I couldn't see a dang thing. Very sketchy. But then they didn't do it when you set up. They did this like, I set up a long time ago, and then all of a sudden, out of nowhere, I start getting PAs. We're breaking above the swing high anchored view op right here on this little move. Any more legit prop firms? I don't even know if these ones are legit, to be honest. Like I don't know this industry that well. I'm not an expert in them. I don't really know. I can't see the internals of how they're operating. But from my understanding, like from what I've seen, Top Step's been around for a minute. They're always there. They bring on people. They're very, very in the present. Like they're available, right? They do live stream. They're around. And then Apex has just been known to pay out some pretty big payouts, but it just seems hard to get a hold of anybody. Like even the CEO is like, he ain't even on Twitter. At least I can't find him, which is weird to me. And if they're not accessible like that, if they're not like a public figure, if they're not out, I don't know. Something shows red flags about that. But that's the thing where that's just a narrative. Like I don't know, and I could be wrong. He could be on Twitter. I remember just searching him before. I'm like, dude, how could the CEO of this gigantic like prop firm paying out these type of money just not be accessible on? And then when they post a video like on YouTube or something, it's like, I don't know. It just doesn't seem like it seems sketch. They're good for learning. I don't think that they're necessarily scams. It's just, remember, businesses, when you start a business, any business can fail. Any business can fail. But when you're dealing with your personal money and you're not taking payouts, and say if you build up a huge account and waste all your time doing it, and then all of a sudden they go under, or all of a sudden they come up with some weird reason why they can't pay you out, dude, that'd be just like gut wrenching. And that's happened to people.
Green sees inflation back to 2% in the next few months.
FTMO is like $700 for 70K. Wow. Yeah, that's a lot of money, man. I think the most I've paid for an evaluation is like $150. The most ever. For a single evaluation. I haven't looked into any of those ones, unfortunately. I just don't. I just haven't. And they're probably different. Like a lot of them are based in like Dubai or Tel Aviv.
Do not think a rate cut is
for whatever reason. I don't know why. Nice little pop through this little swing high anchor VWAP. A little consolidation is kind of following through here. So let's pull up the book map, see if we got any more updates here. It's still holding up rather well. We still have this liquidity above us. Quite a bit of contracts, 420, 230, 230, 100. So if we break through that, I mean, that's gobble, man. We're making some moves. Unfortunately, we don't really still have like a pot, like anything. Market net flow is giving us no edge. other than the convergence is not there, so you can have the counter moves. And if you saw this in the early trading session, we've been saying that, and it's been going up. It's been going against what market net flow is telling us. We're moving up towards the daily expected move so far. I mean, it looks good, people. I mean, so far, but we haven't even had a pullback today. So this is what sketchy is. We're moving up like this in one straight shot. Okay, what's the pullback going to look like? Is it going to look like this? Is it going to look like this? Is it going to look like this?
Saying she sees rates in restrictive territory for
Right.
a while.
I'm interested to see what this consolidation looks like. Now, if we get a straight shot move into the daily expected move, I feel like the trade's kind of been made there at that point. Very interesting day. Maybe it goes sideways. Maybe we try to break out. Maybe I don't got a good read, right? I don't got a good read today. I don't got a good read. Sorry, guys. It is what it is. I don't know what to tell you. I'd say we look at 0 date now. 50-80, 50-20. 50-80. So they're reaching out here still. And then 50-20. So I don't know. When I'm looking at this, if I'm looking at ES, I'm thinking like, okay, maybe that's that for the day. Maybe this is the day range. Okay, let me see if I can draw it out here. I mean, that's a 20-point differential, but whatever. It is what it is. And then 50-20. I don't think 5,000 is in the cards today, unless if market net flow really changes on us. I think we need convergence to go to 5,000 today. So you don't want to ever rule it out, but this would be the range to the downside, and I'd say this would be the range to the upside, maybe. It's so early in the trading session. So early. So, even 5,100 could be potentially in the cards, but I'm just drawing it out now so we have an idea, We're basically up there. But this 50-50 level has also been kind of just, jacking around. So maybe I'll just look at it like that for the day and see what happens from that point. We do have some auctions coming up. 4-week, 8-week, 5-year, 10. So we got 30 minutes or less than 15 minutes away, about 15 minutes away. And that's about it. And for some reason, those have been bringing quite a bit of volatility to the market too. Okay.
Viewers Green saying UK will be importing inflation via a stronger dollar.
New high there for NQ. I'm just going to remove that now. Market's just floating up higher.
The strong dollar has a bigger impact on emerging markets.
Let's take a look at some of these intermarket assets to give us an idea here, like if this could be a potential fake out here. TNX CGI, yeah, the 10-year yield's at the high of the day. Dollar, let's take a look at what the dollar's doing. Dollar's coming off a little bit. So see how this kind of peaked here and then it's down, up, down, up, down, up like this? I mean, it's kind of what's going on here.
We're about 15 minutes down to the European cash equity close.
645.
The DAX up 0.5%. The CAC cron up 0.6%. European equity markets are not far.
It's kind of
from
been choppy, kind of with that.
Approach the cash close there.
Yeah. So let's see here. It'd be nice to eat this up.
We have seen bond yields turn slightly higher across most of the continent. The French 10-year up.
And you're getting support beneath us again. So as we're moving into these areas, you can visualize and see the market book stair-stepping up. So that, once again, is actually a good sign. Yes, the other day, this was pure blue. It was pure blue beneath us. Which means that if sellers step in, it just goes like this. So at least we're getting something beneath us as the market just presses up. So I don't think that I'm going to be firing off any trades today, other than the one that I've already just closed out not too long ago. I think that's how it's going to be for me. Unless if something tightens up, then maybe, you know, I can probably force a trade. But as it stands right now, I'm just not feeling it, unfortunately. I'm just not feeling it. What is going on here in the chat? Never force a trade. Always get consent. Always. Oh my gosh, Moonraker, how do you think of this stuff? How do you think about this? Nice job, Ruben. Good stuff. One of your friends makes some decent money from a prop firm. That's awesome. Yeah, when it comes to futures, like I don't really have the stomach for it either, at least for my personal accounts. People are like, why don't you just use your own money? I'm like, I don't know, because I value it too much. I'm too much of a scaredy cat. I'd rather just... But that's the unfortunate thing, is when it's not my money, like a lot of the time I just go crazy. I just don't care. Now I'm trying to take it a little bit more seriously because I have more accounts, but you know, coming into 50-60, which was one of the 0-date levels earlier, traders are now reaching though 50-50-80. Sitting right around 5100. Okay, so point of control. Some people are mentioned there's a point of control over here at 5100, and that lines up actually with consensual trades. That lines up with a gamma level.
Equities here in the U.S. extending.
What's that, Trader Joe? Is that a simulator dot trading terminal? Oh, is that like just a do you have? Let me see.
As a composite.
Oh, whoops.
100 points.
I didn't mean to pin that. Sorry, my bad. Unpin. No. Oh my gosh. I'm sorry. I don't know what I just did there.
In less
Unpin.
than 15 minutes, we're going to see the results of the 4- and 8-week bill auction from the U.S. Treasury.
What is that? What is that? Oh wait. So who asked what? Inspector. I see. I see. He's simulcasting on YouTube. Oh yeah. I'm on YouTube and I'm on Twitch. I'm reading your guys' comments right now. The comments are right by each other, but sometimes I do I have a favorite paper trading broker? I don't have a favorite paper trading broker, but Trader Joe just supplied one. I've never seen that one, but I haven't really seen. And it depends on what you're paper trading. A lot of platforms allow you to do paper trading. But I don't have really a preference. I like having a little bit of my money in if I'm trading, just to get a feel of it, you know? It makes it more real. Even if it is 30 bucks. All right, so 50-60 getting slightly rejected here. And we're coming into about 10, 11 minutes away from an auction. My trading homies live. What's up, LG? LJ? So Rob was asking, wait, how do I get the 0-date? I source the data from Gamma Labs. Gamma Labs. 50-20, the put wall, 50-80, and they're still reaching out here to 5100 too. So 5100 could very well be potentially in play too. Yeah, it's hard to learn how to trade with fake money, because you like, even when people make strategies, doing the strategy with real money and then doing the strategy and back testing it, you're creating a strategy based on what previously happened, and you're saying, oh, but it did also good. But then when you're actually in it with real funds, it doesn't sound like it would be different. You'd be like, ah, whatever, no, I trust it. Yeah, no, it's different. It's very different. You tend to, Tom Huard said this great, you tend to be fearful when you should be hopeful, and hopeful when you should be fearful. Meaning that when the trade is going against you, you're hoping that it comes back, but instead you should be fearful that it's going to continue to go lower. And when it's going in your favor, instead of being fearful that it's going to come back down and you're going to lose your money, you should be hopeful that it's going to continue to go up because it's working in your favor. Great book. I watch some of his interviews and stuff like that. I liked his book a lot. Yeah, paper trading doesn't really have the emotions. It helps you get okay, so paper trading for me, when it came to futures, which I didn't paper trade, I did with a prop firm or whatever, like 30 bucks. It was good because I didn't understand quite how everything was going to respond and react, and getting used to that stuff. So once I felt a little bit more comfortable, now I wouldn't mind putting my own money in it. now I feel like I can control it a little bit better and I understand a little bit more depth than what I did in the new market. A penny for your thoughts. Hey, brother. Hey, brother. Special team, special plays, special players. Oh, it has a free replay feature. That's kind of cool. All right, people. Let's see here. We're pressing up on this liquidity right overhead. We still have some supported bids beneath us. It looks like we're going to gobble it up. I mean, that's what it looks like. Quite a bit here. Like 5100, there's over 400 5100 on ES. While that's going, let's take a quick look here. Dollar's coming off. Dollar coming off is actually kind of nice to see. Let's see what bonds are doing. I'm just look. Whoa, what was that? TLT is coming off a little bit, so bonds are coming off. A little bit of a hit, a little bit of a mixed up market. You know, a little bit of a mixed up market here. Still, it's like, and then we don't really have any edge here. We don't have really Ed Shear in. And as we've just been kind of a single shot up to and around the daily expected move. I don't know. You know. Like I said, a little bit of a hard read on the today's tape. We haven't even tested the week-to-date anchored VWAP yet on SPY. Like, this is where the week started. And we're coming back up into and around that range now. We haven't tested it yet. I have a little SPY position on that I executed into more towards the low. I forget exactly where, actually. I can't remember. I'd have to look at the exact entry, but have a SPY position on as we were pulling into this weekly expected move, thinking that we can get back above the month-to-date lower EM. But even I'm thinking about even chopping that off, given the context of the market. It's a little bit easier to trade ETFs in this higher volatility. Individual names, man, you get some jumpy. Thoughts on Heikenhashi candles? I don't really use them. I'm no good at it. I know an trader that uses them exclusively for his strategy. Does great. Me, I have no opinion on them. No opinion. I actually now I come to think about it, I gotta see if that trader's even still around. He had some tough times going on. He had some really tough times going on, health-wise. He was posting massive gains too. Very good trader. Yep, here's Bookmap. Still kind of ooh, there we go. As I pull it up, we're getting some liquidity here that looks like it's going to get filled. Yeah, careful there. Yeah, that little order that just came through, that was interesting. Right when I pull this up, still underneath all this liquidity above us. What happened to my mouse? Oh, dude, come on. Are you kidding me? Did my mouse just go out? Give me a second here. Give me a second. I'm trying to get my mouse back. I thought I charged this thing up. All right, I'm gonna have to keep it charged up. So yeah, we're still holding up in this area right here. It just keeps kind of trending higher, people. So far, little choppy up in here, but it kind of just keeps pressing, which, man, I like it and I don't like it at the same time with this market net flow. Because if we go higher and it's just this small chop, it's like, okay, when if volatility comes in, we might just see a quick hit down. And you look at like I said, the dollar coming off is nice to see for if you're bullish, but then the 10-year yield's holding its high. So yeah, man. And if you traded this like area here, I mean, we're basically in the same area. So, you know, a 30-second candle could bring us right back to kind of where we were. It's starting to get a little bit more blue down here too, which I don't like. We had some nice bids stepping us up. Eh. We got 2 minutes. So as price is pulling in, it's getting ready here for the 2 minutes. We have some 4-week and 8-week bill auctions. We'll see if that brings in some volatility. Could be the market just kind of waiting that out. What I like seeing is I do like seeing this, higher lows into this. I want to see continued bid though. And then, this is just holding as a level of resistance. It's into the deep. Up, see, here's some liquidity there that's going to get filled. And now they're adding up overhead. Did you see that? They just added that overhead. Now it's above us. Yeah. Watch out here. There's that clear blue ocean for you. Yep. Okay, we're getting a little bit more added beneath us. It's all we're about to get the auction, so this is what we're seeing going into it. Decent volume, so this is the market probably just anticipating something and or just locking in. Okay. Pretty decent size reversal as we're coming into this prior resistance. Honestly, I don't let it happen. I'm not going to sit here and say it's going to pull down significantly, and I'm not going to say it's going to move up significantly. There's no edge here. I don't have any indication that's telling me, that we can't just freaking fly back through this or rip further down. All right.
Reminder, we're in the window here. We're going to see the 4- and 8-week bill auction from the U.S. Treasury. This
here comes
the 5-year TIPS auction coming out.
Still nothing here other than still a bearish divergence with no convergence. If this starts lighting up red and we're in bearish divergence, then I'd say, yeah, just buckle up, man. Then we have flow against us, and we can go right back to the lower weekly expected move. You can see 50-60 held as a resistance as we're pressing down further.
Irrespective of what
NQ coming back into and around the opening range. We'll watch the daily VWAP and the swing low for potential move if it does come down there to see if anything sets up from that point. We could also anchor in from the swing high and just watch that too as well. Okay. It's the power of Bookmap. What indicators are lagging? I wouldn't even consider gamma levels an indicator. I would just consider them a tool of what the market's doing. It's like saying, you know, like because it's constantly changing with the market. It's like price action.
8-week bills bid to cover 2.90, drawing 5.275% with 84.5% allotted at the high. 4-week bills.
All right, so here comes that.
5.280%
See what we can do.
with a bid to cover 2.90.
The radio guy is from Trade the News. Direct feed, gets access. It's very quick market insights. Non-biased, just telling you what happens right when it happens. Trade the News. It's you get a 7-day trial if you want to try it out. It's not cheap. It's pretty expensive. Price action, volume, news, eco calendar is lagging indicators. Okay, what's not a lagging indicator? That's why we use implied volatility, because it tells you future volatility. Two different types of volatility: historic volatility, implied volatility. You're welcome. Mac DNRs are like, yeah, no surprise there. Yeah, it's using. Most technical indicators, it goes back to the basic principles of technical analysis. You know, the king pieces of is price action volume, but what a lot of people now are starting to include, myself included, the kings of, you know, because all technical indicators are based off of price action and volume. However, now I think one of the king indicators is also volatility. So price action, volume, volatility. Most things are developed and designed from those three aspects, right? Not sentiment and stuff like that, but even sentiment, I guess, actually, because sentiment changes in those contexts of price, but it's, you know. And then even if it's not lagging, you still have to, you're approaching the data from a lag, because your brain is thinking, what can I do now after the data has printed? So lagging, leading, who really cares? It doesn't even matter. It's a weird debate, because you can make money off lagging in old information. It all comes down to how you approach it anyway. You got to understand, you're always going to be wrong. You're going to be wrong time and time again. So what's more important about, you know, worrying about if it's leading, what if it's lagging, you know, whether you're going to make a lot of money or a little bit of money, you can only control 4 things. So focus on what you can control. What to buy, when to buy it, how much to buy it, and when to sell it. None of that includes where price is going to go. Not earnings, news, and Fed meeting. Yeah, what do you mean that's not? It's not an indicator. Earnings is not an indicator, my guy. News is not an indicator.
Quarterly Microsoft OpenAI partnership could face EU antitrust investigation.
Red.
Reminder,
You're always going to be
yesterday,
wrong.
we saw
Spoken like a
report that
true
they
fellow
would
married
likely
man.
avoid a formal EU probe over the
That's too
$13
good.
billion
Hey, good morning, LA to
OpenAI
Mex.
tie-up.
Good to see you, man.
This report saying the partnership could still get an investigation.
Price action is
from the
technically lagging.
European antitrust
It
regulators.
actually is, because it happens and then you have to respond to it after it happened.
This report saying
It happens in
OpenAI
real time,
partnership together with
but
those
your response
including
to it is a
Google,
lag.
Amazon, and
You see what I'm
Anthropic
saying?
have triggered
Right?
scrutiny on both sides
In a
of the
way, if you
Atlantic.
think of it that way. But technically, if you're looking, I mean, it's not leading price, right? I wouldn't even consider it a lagging or a leading, really, because it literally happened. It's the present. It's a it's a present indicator. It's happening in the present, in the now. But your response to it is a lag. And predicting what's going to happen would, you know, it isn't a forecasting or whatever.
Report saying that they could
But
look
yeah,
into
price action,
specifically
volume,
whether partnership restricts or
volatility.
restores
Those are the three
competition with individual
keys
internal market,
that
or
everything's built
whether
upon. So
Microsoft
all these
market power
indicators
distorts the
are
market through
built
certain
on
practices.
those three.
This report saying the European
The real,
Commission
like the
leaning
really, honestly,
towards
the main
second
leading indicator
sustainable-
out there that I think is only the one that actually tells
decision
the
has been
what can
taken.
potentially happen in the future is implied volatility. And that's why I look at expected moves. I think it's the best forward leading indicator of volatility. And even then, it could be wrong, but it still gives us great insight to where the market's going to go. Point being, take a look. This was the weekly expected move that I brought out last Friday. Where did price go from? From here to right here. That led me to believe, right? That is a leading indicator. I pulled this last week. This level, last week. Pretty wild, right? All right, market's coming in a little bit here. I've trained my responses to respond faster than price. Being asked about what's my go-to setup play to look for that easy money. Man, it just depends on the conditions of the market. I like breakout trading, but I don't like it in these conditions. When it's these conditions, I posted a tweet of what I mean by when these conditions change and what I specifically look for. And right now, these conditions are different for me for a breakout trader. So in a day trading environment, I think an easy money setup is when we're looking at, for day trading, I think that when we have market net flow going for us, green line above the red line, and we have convergence, and that means we're swimming with the current, right? That's what dealers are doing. You're playing with them and then buying little dips and pullbacks and tighter price action and playing with that trend. Because if you catch a trend day, it's so dang obvious looking at these tools that you literally can set it, you can forget it, and it can just go.
Rental revenues 40.
It's pretty wild. I feel like those are the easy money days, and they come, you know, twice, 3 times a month maybe, and you just got to be ready for them. They come sometimes more frequently depending on the conditions of the market.
45.5 million up.
But they're around.
6 million year over year.
But they're around. There could be trend days to the downside and upside. Yesterday was a trend day down all day. If you know, you know, right? We posted that on Twitter, right? It was literally red line above the green line. Green line was trending down. Red line was trending up. It was convergence. It was pure trend day to the downside. If you were fighting that and if you were fighting the dips yesterday and you didn't know about market net flow would have said, don't buy the dip. Straight up. It just says it right in your face. Don't buy it. Don't bother. Is it a perfect indicator?
We're reporting first quarter
No,
net income
nothing's
100
perfect.
million Danish krona, EBIT at 200.
Market's still finding its little resistance up here.
Revenue 3.
Remember, it's very likely you just traded in and around the weekly expected move. So we'll pull back up this little box that we drew. Back under the 50-50. You can see we came up to 50-60, which was the 0-date level. That was identified in the early morning session. And then 50-80, people started reaching out for 50-80, so we drew it up a little bit further. So we have a nice strong move. Now we're seeing what the market can do as far as consolidation. NQ is still below the swing high anchored VWAP, but it's still above the daily. It's still above the opening range. It's above the swing low anchored VWAP. So the market's still holding itself together as it stands right now from the opening price. Okay. Perhaps this gets us some sort of setup here. Like I said, I would feel much more comfortable seeing this in better context. It's starting to move a little bit. I mean, I don't know. Maybe this is the early signs of something. You get the green line going up, red line going down. It's just if this starts turning back up and this starts turning down or sideways and this starts turning red, I'd be like, ugh, watch out. Here we come.
Legislation.
Here we go. Reddit, it kind of does for like, you can look at multiple times for market net flow. You can use it like that. I haven't really, but you can go into like the expirations and you can look out more history. You can look at like today only, last 5 days of market net flow. And if I go out to the last 5 days, like what do you notice? The red line's been going up, green line's been going flat to down, and you've been having multiple times where you lose convergence. And that's, look at right here, when we lost it, the market's been going down, right? That was the day that I was talking about. Even here, we lost convergence and the market was going down, right? And then when you had convergence, when you lose convergence, the market went up. You lose convergence, the market could go up if there's a bearish divergence. It goes the counter trend. Right here, it lost and it started going up. So yeah, if I look out and just look at this, I'm like, yeah, this doesn't look good for the last 5 days or whatever. Oh my gosh, my mouse. My mouse. Hey, let me charge it for a second here before I can switch screens again. I'm gonna try to switch screens here before it kicks me out. I'm gonna charge this while this is loading. So how does money flow fit into your analysis? Shaking money flow, volume flow. Shaking money flow. Shaking money flow, shaking money flow. I don't really use that tool. But okay. It's a way to view price action, right? If I remember correctly, it's using just the price action, right? Price action and volume to create that. So it's basically a volume-based indicator. And kind of where the price is, if I remember correctly. I don't know for sure. But here's how I look at it. There's buckets of indicators, right? So I've seen people like this is when I know somebody doesn't really know what they're doing. Not only do they have a bunch of indicators on their screen, but they're using multiple indicators that fall within one bucket. Like, what are the main indicators? I got to pull up my course. Give me a second here. Course that was never released. See if I have. I think I made a page on this. The buckets of indicators. God, I gotta post this thing. I gotta get this out. It's so good. Literally talk about everything.
Ipsos in Paris, France, reporting
maybe one day.
Total revenue in the quarter at 558 million versus 532 million year over year.
Sorry, give me a second. Okay. 4 buckets of technical indicators. Give me a second here. I'm gonna pull this up while this is loading. I'm not getting too interested into this right now, for obvious reasons, because the market's coming off, right? Let me go back to history one day, today only. SPY, yeah, still. I mean, this could be the consolidation, right? So now I'd just be watching this and see if we can break a high of one of these candles. Maybe that'll give us some insight. But it's just strong move, and now it's coming off. Could be just a pullback. I mean, right now it's still technically, it's still bullish. Bullish structure. Bullish structure for the day. Bullish structure for the day, not like zooming out, okay? And we're still holding underneath the swing high anchored VWAP on NQ. So I'd prefer to see that above it. And then we're above the opening range for NQ. We're above the daily VWAP. We're above the swing low anchor VWAP. So getting back under this stuff, I don't like the look of that, but I would like the look of, you know, that or something like that, and then breaking back up higher. But like I said, there hasn't been really a great read. Okay. So check this out. 4 buckets of... So the 4 buckets of technical indicators. So you had mentioned like Chaikin money flow, right? I don't know where that falls because I can't really quite... Oh, it falls under volume right here. Oh, I put it in here. Okay, that's what I thought. Okay, cool. I'm like, I can't remember. Okay, these are the 4 buckets of technical indicators. So remember, everything's basically based off of price, volume, volatility. All right, price, volume, volatility. So the 4 indicators are trend, momentum, volume, volatility, and what I was different times. And what I was saying was, it's very obvious when you see somebody's chart that they don't know, because they'll use like 4 different trend indicators, but or like 3 different volume indicators. You don't really need all of that. To have a good grasp on everything, like if you're really trying to use some indicators, you can have, you know, a trend indicator, a momentum indicator, a volume one, and a volatility one. But if you only have like volume indicators, you know, you don't have a good idea of momentum, trend, or volatility. Now, you don't necessarily need to use all these, and some of these kind of actually work like for example, momentum, you can actually have the MACD. And for trend, you can also have the MACD, right? Volume could just be lower volume. It could be volume weighted average price. But these are the 4 buckets. So when you are looking to add indicators to your chart, it's always a good idea to have a round picture, a big old overhead view of multiple of those indicators. No, you don't need to. You don't need to, but that's just kind of like where most of them are, like the categories or the buckets or whatever, right? Price is the only thing that matters. No, price is not the only thing that matters. Price is not the only thing that matters. And yes, I know about trending. I know about leading. I know about lagging. It's all here. You might think that. I went through detail of all this stuff. There's leading indicators, categories of indicators, the drawbacks of leading indicators. You have lagging indicators, benefits, drawbacks of lagging indicators. Okay. Price action is incredibly important, but it's not just price action. You have price action, volume, volatility. Those are the 3 king indicators. It used to be just price action, volume, but volatility is now playing a huge role in these markets. And there's 2 different types of volatility. You have historic volatility, and you have implied volatility, which is the future of volatility. And if you're not utilizing that, if you don't understand that, you're trading at a disadvantage. You can do great with just price. But if you're just trading price, you're also not seeing what's happening behind the candlestick. Because what do you call this? What do you call this? What do you call these orders up here? Do you call this price action? The action in price right here is what's happening. This is the order book.
Last air, some color from the earnings conference call. Executives saying they're looking beyond.
This has not taken place. It may never get filled. Who knows? I mean, it's probably going to get filled at some point, but you get my point?
In place. And so far in the
this is seen behind the candlestick. This price action has not taken action yet. These are just sitting there. There is a lot of tools. So if you're looking for if you're trying to get more into this and more intricate, like level 2 data, I don't know. You can argue that it's price action because it's action going into the tape, maybe. But a lot of the times when people say price action, they're just saying what's happening on the print. boom, 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 right? The candlestick chart. All that matters is this candlestick chart. Okay, what about all the important orders that are above us that have been here since here? And what about when they all got pulled beneath us? Do you notice here how they all got pulled and then all of a sudden we went down and then they added more liquidity above us and then we started going down again? You cannot see that on a candlestick chart. Sorry, you're trading blindfolded. You can look at the Bookmap, or you can look at level 2 market depth, right? It's a little bit harder to read that because it's just numbers flying across your screen. But you can just pay attention to the bigger orders, right? And then what about gamma levels? Gamma levels are built off of, you know, hedging activity, options markets, right? It's not just the price action of these candles. It's people going in to the options chain. You have open interest, right? All kinds of stuff. All kinds of stuff. Yeah, breadth. So that goes off into, I don't put that under a technical indicator. I mean, you can use like various technical ways to view breadth. So price, volume, volatility. Then you have also sentiment indicators. Could be breadth.
From JP Morgan, Pinto,
not necessarily.
saying
No,
there's only a
the
very,
market
very
breadth, and then
low
you have sentiment
probability
too
of
as well.
interest rate hikes.
So market's still coming off. And when I'm looking at Bookmap here, I mean, it's just they're walking price down. There's a little bit of supported bids beneath us. They're starting to add a little bit here by daily VWAP. Let's take a look at market net flow, see if that's given us anything here. We're starting to actually get convergence to the downside.
High probability of no rate cuts this year.
Would I rather use Footprint or Bookmap? I'm not familiar with Footprint. I'm not too sure. Is that a software program or an application? I don't really know. Bookmap I use, I think I have like global with DX feed. If you guys are interested in Bookmap, there's links on my like videos, and also if you're in the Discord, I have like the referral link there, and you get like 50% off of quarterly, you get 50% off of yearly, and then you could get up to 20% off, I think, or 20% off of like monthly. But remember, Bookmap, that's just for the software. You also have to have a data feed, so it's not like inexpensive. Footprint tells you the auction behind the candles. It gives you a positive or negative delta reading. Interesting. I haven't seen it. I have to look at it. So I don't really have I wouldn't really have an opinion on it. Is it pretty similar to Bookmap? Because Bookmap has that kind of those tools too. Like you can look at like there's indicators on top of all of this. Like, you know, I can even bring up the hero indicator on here. There's all different types of tools that you can use. I just use the Bookmap just looking at the heat map. I haven't really got too like intricate in all the technical indicators that could be built on top of Bookmap. Moonraker's asking about level 3 and level 4 market data. Level 4 is Nancy Pelosi. So that's where you have access Nancy Pelosi access, which is very, 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 very expensive data. Level 3 data.
Charlie Tango Romeo India.
Level 3 data is like, you know, you have like some Wall Street knowledge, you know? You get into the weeds a little bit, but level 4 is like that top tier, you know? That Nancy Pelosi inside information. Yeah, CVD cumulative volume. This has been kind of sinking off here too. So as the market's been kind of moving higher, you can see that this is kind of flattened out and sinking down. So it could give you some insight. It also you can see divergences play out too with this. This is a useful tool. Do I use it? Getting some supportive bids beneath us. It's kind of nice, but we still have some overhead struggles. And then when we start bouncing, kind of just leaves it open here. And when you get up like this and it's just basically a dark blue sea over here, you can get pullbacks quite frequently. So, all right, I'm gonna let this go here for a second. I gotta charge my mouse a little bit. Give me like a few seconds here. I'm gonna charge it up while this is loading. I'm gonna run to the restroom while it's loading and get some more water. Be right back.
Saying that they're keeping options open for more Iran sanctions. Swiss Central Bank's Martin saying Swiss inflation is likely to remain between 0 and 2% range.
Okay, dokie,
for the next
artichokes.
3 years.
The news, the verbal news feed I'm using is Trade the News. You're listening to Trade the News. All right, got a little bit more charge in it.
Exotica reporting first quarter revenue 2.32 billion euros, slightly ahead of expectations.
LTH, some spoofing going on. You can actually see spoofing when it takes place here. It's quick and fast, and yes, it is illegal.
That's lower on the side. We've got total revenue 6.34 billion.
Sometimes, like you almost visualize spoofing. Sometimes it's pretty crazy.
Like-for-like sales of 9.4% for L'Oreal reporting first quarter results. OR in France.
So that was a nice little pump right there, and you see how they added liquidity just underneath us on that move. That's positive. See, that's exactly what happened here, and then it flushed it more to the downside. We bounced. So like on that, like if you press up a little bit high, they just pulled it.
L'Oreal total sales.
Oh, they just pulled it.
2.24 billion.
That's annoying. See, they held it here on that break. This is the well.
L'Oreal, like-for-like revenue up 9.4%, better than 6.5% expected. OR in France.
Spoofing very short is like I don't know. I mean, it's basically an algorithm, right? Because it's quick and fast, but it's creating that there's an illusion that there's demand and supply. So, for example, if a market participant came in here, so for example, like if I was to spoof the market right now, and I was like, dude, I want to get my orders filled way down here, but in order to do that, I want to spoof the market to fall off. I would throw in a gigantic order up here. And then all of a sudden, people might see that added liquidity, and they'll be like, oh, yeah. And then they'll be like, oh, dude, sell, go now. What do they see? And then the market starts pressing lower, and then all of a sudden, it pulls it off really quick. It goes, boop, it goes away. It disappears and comes down here, and then you get these cheaper orders, and then it fires right back off. That would be an idea, like a spoof. It's a manipulation of the market. And no, like, I'm not a big enough trader to manipulate this market. But there are hedge funds. There are big time traders that can come in and be like, and spoof the market. You know? You cannot, there's actually a good story about somebody who made just millions and millions and millions who spoofed the market. And God, I don't have it off the top of my head. I'd have to look it up. Yeah. And that's, I think, around the time when it became, I'm pretty sure, illegal trading activity. I don't know if it was illegal then or not. I can't quite recall. But you're not supposed to spoof markets. It's illegal, but yeah, the SEC doesn't really give a crud. I think they'll give a crud if it's
moving to where we want it to go, but it's a slow process.
Yeah, they cared with this guy. I forget the reason why, but it was, dude, I swear, I think it was like $80 million or something crazy from spoofing the market. I can't remember, Trader Joe. It was, I don't know if it was a single person or if it was like him working for fun and then did it, or I really have to look it up, but it was crazy, and he did get in trouble for it.
Hurry to get there.
I'd have to look it up. And it's hard to track that stuff, right?
Come from
especially if it's quick.
And they don't think there's a sign that demand is slowing down. We don't expect.
Was it a British kid? He might have been. I honestly can't. Yeah, he caused a flash crash. XO. Yeah, it was a flash crash. Man, I don't remember exactly the intricacies, but it caused a flash crash, and he filled his orders way lower. It was a single person in the UK. It was, yeah, crazy, right? Dev Patel, supposed to be a star in the movie Flash Crash. Is there a movie called Flash Crash?
On Bentley's systems report about exploring options, report says.
Is that new?
Some of the companies that have expressed interest include.
It's the guy that you're talking about, Trader Joe? Okay, sweet. Yeah. Dude, is there a movie coming out called Flash Crash? That's kind of cool. That'd be fun to see. No, 2010 Flash Crash. No. Oh, this was in 2010 Flash Crash movie. Let me see. Flash Crash. Dev Patel. 6 days ago. Wait, Dev Patel stars in Flash Crash. Dude, is this new? Hold on. Yikes, these ads are fucking weird. Oh, pardon my language. Is it even is it a movie yet, or is it not a movie? I don't know.
Forming his position. The economy will continue to grow as we get both mandates back in line.
I don't know. This was a while ago. Maybe the movie's not like. I don't know. It'd be cool to see it if it was there, but. All right, market continues to see some sell side pressure. Yeah, I don't know. I can't find it. If any of you know, then cool, let me know. So market, nice move intraday, but yeah, now we're going on, you know, about 4 candles, 4 15-minute candles, about an hour of sell side. Like I said, it's very common to just trade around its happy place, the weekly expected move. Market net flow, giving us some chop here. It went to a bullish divergence here for a second, but still chop there, not much of a reading. Let's go back to 0 date, see what's good here. 50-20, reaching for 50-20 now. 50-20, man, that's back down over here. That's back down. Whee! We're coming back into the opening range for NQ. The first 30 seconds of trading. We're still above the daily, and we're still above the swing low. You could try. We tried to get back above this swing high over here, but you can see it was trending down. So you know, bullish with caution. Boom. Now we're sinking off into the depth of the opening range. Oh, it's a book going to be a movie. Okay, okay. That'd be fun to watch. That'd be cool. I remember a very long time ago, I used to really get into card counting. I thought it was the coolest thing. And I studied all these things from these like MIT people, right? I like read up on this stuff, and then I got really good at high-low counting. It's a very simple process, as you're just assigning a value to cards, 2 through 6, 7 through 9, and then up and higher. And you can practice and get really quick, and then you have a little betting strategy behind it. I was not good at doing all multitasking, but I would just stand behind a table sometimes, and I would just watch the count, and then I just like step in randomly when the count was high. But the reason why I'm saying that now is because then the movie MIT came out, and I was like, oh my God, I gotta see this. I was so pumped, so juiced when that the Blackjack movie came out after learning how to do a high-low counting. So I got to like early, I got to watch that movie before it was fully out. You know, the early, see, I was so pumped. It was so cool. Definitely, it was funny because once you know the story and once you like, you know, learn about it, it was the Hollywood take versus what actually happened. Huge difference. Huge difference. But still, it was still very exciting to watch that at that time. So I can't imagine like if you were part of the flash crash, right, and like saw it and get now all of a sudden the movies, if get to watch it and you got to be in it or something like that. It's probably pretty cool. I haven't done any analysis on Netflix, but we can do a quick look there. Quantum saying perfect setup. What's the setup here, Quantum? Into some of these anchors, coming into and out of the expected move, or not expected move, earnings. Not, oh my gosh, not earnings. Opening range. Getting a little pop here in NQ. Still though, when I'm looking at this pop take place, yeah, we get some supported bids. So that's nice. You get this here. See how this came in right here? You still have liquidity being added overhead, and then you have a little bit of blue beneath us. So if it doesn't need to start stepping up, but it would be nice to see, you know, as price goes up, to see this like shift up higher. They're trying to, that is like, looks like defending of the anchored VWAP right there. As far as activity today for me trading, I haven't really, can I look at GCT? Yeah, we can take a look at some of these random, like just regular tickers. I mean, not random, regular tickers.
President Pinto at JP Morgan.
Let's pull up Netflix first because Netflix does have earnings. So the analysis would be just based around the earnings. I want to see what Lulu's doing too, because I got out of Lulu, or I didn't get out. I just took some profits. So Lulu came up into that point of control. So I got out. Where did I get out? I think I got out right. I didn't get out. I took off 30% of the 30%. Wait, didn't? I think it was right here, and now it's up a little bit more. whatever. I can't recall. So I have a little bit of position there. All right, let's pull up Netflix. Netflix, man. Netflix trades like crazy. So I think the only important thing right now as far as Netflix goes is the expected move. Obviously, it's a good looking chart, right? It's up, it's high, it's, you know, a few days separated from its high from the year. It's earnings. Earnings are wicked and wild. So you have a $51 expected move, 51.73 to be exact. So if we drew that out, $51, right? Here's the risk going into earnings for Netflix. Okay. As it stands in this current moment. We got to update it more towards the close. I don't know if I'll be here, but somebody in my last video told me that I'm really impatient on my lives. And I was like, really? I was like, you must not be watching, because I like the day that he was commenting, I was like, I didn't even take a trade, and today I haven't executed anything. I straight up said, I was like, tell you what, dude, I'll pay you out if you can prove that I'm impatient. I gave him my email and everything. Haven't heard. Crickets. Crickets. So this would be the risk for Netflix. That's just one standard deviation. So yeah, I mean, I'm not going to say like it's going to go up or down. I don't know what's going to happen, right? It's in bullish context, so you'd think it'd go up, but it's too binary. I don't know, right? Ed Thorpe invented the card counting. Glenn? Yeah, that name sounds very familiar. Maybe that's when I heard that name from. We faded VWAP, and I'm on the US 100. Okay, US 100. Okay, cool. Nice. So we'll look at, yeah, we got GCT. So Makensky, we'll look at GCT. What is this one? GCT. GCT looks pretty nice. I mean, very nice tight price action here, right? Which allows for a good risk to reward. Nice little flag here, and we're breaking from that today, and we're getting some follow through. We're going to come retest these highs as more than possible. It's already up 9% on the day. So, GigaCloud, like this is a very high beta name. So make sure you manage this, because if you just enter here and you go in full size position, you don't really want to just like, this would be an ideal stop down here, but that's down 21%. So, if I look at this, I'd be like, dude, do I really want to take a full position to lose 21%? No, absolutely not. So I would do the math and calculate what I'd be willing to lose as far as the dollar amount goes, and I would have to adjust the position sizing. There's sometimes, dude, where I make 5% on a position, but yet it's making more money on the 5% move than a different stock that went up 20+%. Like DIY went up 20+%. I made less money there than I did on a 5% swing on SPY.
Domestically controlled.
But yeah, it's still holding up. Higher highs, higher lows, holding the trend, breaking out of some of these type pivots. Looks good, man. It's good so far. Uh-oh, Moonraker. Back with the 10,000. Wells Fargo. Let's see what Wells Fargo's up to. Yeah, nice. Nice move on Wells Fargo. Financial's doing good. Got a little choppy here, but this one we analyzed over here before the earnings, which I don't like executing into earnings. And then we got a little floppy, but overall Wells Fargo was holding up really well. And now we're breaking through, and we're actually coming into that earnings expected move. I forgot to remove the levels, but this was actually where earnings expected move was when earnings took place. It's kind of funny. So yeah, this looks, I mean, continuation, dude, to the upside. New high, breaking out. We'll see if the volume's good. I don't like chasing highs. I don't like chasing a 2.87% move. But if you were in it and you play the breakout, I mean, this is great execution. Technology is a sector that's down on the day. Everything else looks pretty solid. Communications is the leading sector. Tesla down pretty significantly. Capital One Financials up 4% on the day. So a lot of these financial names are really holding this market together here. Meta up almost 3% on the day, not really separated from its high. These are all positive signs for the market. UNH getting some continuation to the upside, right? Bullish earnings gap. And we had follow through. Very common to see that follow through after a bullish move. Nvidia well off the lows of the session, trading within the prior day candle right now as it stands. But we did crack another low. Other than that, we've just been kind of going sideways. Target's up a little bit slightly on the day too. You can potentially consider this just flagging out here. Sideways after this bullish earnings gap there too. Those are the top in the S&P 100. The laggers is Tesla is the worst performing stock in the S&P 100 right now. I'd say maybe watch for the gap fill down here, but you have earnings around the corner too, so you know. You have PayPal down 1%. PayPal pulling back into and around the 50 and 200 day neutral. From a weekly perspective, I mean, this one looks like it could potentially still be setting up. I would like to see this flatten out to turn up. So big old just laggard here. Doesn't look horrible, but it's a lot of sideways price action. Qualcomm broke down from this tight little contraction. So I played this for a little bit over to here, and then it formed more of like an ascending triangle. So, right, expansion leads to contraction, and then it broke it down to the downside. Okay, that happens very frequently when you're in a negative gamma environment and you're below a declining 5-day moving average. Stocks from across the board can get tagged. Microsoft down slightly on the day, off the lows. Take a look at a SPY chart on the daily time frame. Inside trading day. Not much happening here. Sitting around the lower weekly expected move. All right. Getting a little bit, a little bumped ups here. It's been chopping around how this kind of leaves it blue and open, right? Like we've been saying. You pop up and you come back down. Still have a little bit of a defense over there under the daily or at the daily VWAP. See if market net flow is giving us any insight. Market net flow is a bearish convergence. I don't like that. I don't like the bearish convergence. So if you look at 0 date, 50-20 is the put wall, 50-35, some size, that's 10 points lower, and then you have down here too as well. If we go into full-blown bullish divergence, bullish convergence, I mean, watch out, man. This could take a turn. Could take a turn. You don't want to believe it, but it's just kind of what's happening. You're getting some added liquidity up overhead. I don't really like the look of this. Maybe this is like a lunchtime lull sort of ordeal. Maybe it's something more. We're still holding the we're above the opening range, okay, and we're above the daily and the swing low anchor VWAP. So that's positive, I guess. But it's also like neutral. You see what I'm saying? It's like kind of neutral right now. And then you have market net flow giving us like warning shots. Weird tape, not a good read. Still. And then we're floating around that 50-50 gamma level. It's not a good read, man. It's like, could be bullish, could be bearish. Like, it just... When I have this much uncertainty, I just don't fire trades. So I'm happy with what I took in an early trading session till, in the morning. It's like $65 or whatever across 20 plus accounts. 20 accounts. Are there any clues about buyers stepping in right now? No. There's clues that there's getting clues that there's actually going to be increased selling. That'd be my only clue, is getting the convergence here. Now it's under the 0 line. Notice how this has been gray. This whole part was gray. The market was moving up, started waning a little bit. Then we started turning red right here. The market's just kind of going down like that. It's not like a crazy bearish divergence by any means. But nevertheless, it is technically a bearish divergence and it has convergence. I don't know. I would like to see that change to feel a little bit more confident. And then if it changes, if things change really quick, I'd be like, all right, let's play it up back to the swing high. It's just not changing yet. It's changing, it's getting worse looking, especially when you look at like people are now really reaching out to 50-20. So yeah, let's change the tape. But right now, it just seems like it wants to go down. It's a yeah, trading low. It's a I just copy trade it. It's like one account I trade and it copies through. Sometimes I might break it up if I need to, but put call, put wall, call wall. I think of it as potential support, potential resistance. You know, if you have a lot of traders kind of coagulating into like a certain area, this could be a level of support if price were to come down in here. Doesn't mean that it can't undercut and cut around it, but as price is coming down, if traders aren't reaching out further, they're kind of more focused in on the 50-20. There's been opportunities where it comes right back into 50-20 or it bounces from 50-20 and so forth, right? The main wall. Call wall, the same, you know, same theory. If price is beneath it and people keep on reaching out further, and we have some supportive bids beneath us, you can look at that as a potential level where price can get pinned if they're not going to reach out much further. And it gives you kind of like, if you're looking at it from a 0-day perspective, it could give you a range for the day where price may kind of move to or move within. And then if we're going to get to one of these levels, I like to look at market net flow, because market net flow can confirm, like saying, okay, now stay in the trade, stay in it. Because it increases the probabilities of going to hit it. So I'm looking at this and 50-20 is growing in size, and market net flow, it's not giving us much, but there is a bearish convergence, bearish divergence, bearish convergence. So it says, okay, I mean, it's opening the door to 50-20.
Google DeepMind.
Not like super clear. Like this would be much clearer if the red line was going up like this above the 0 line and the green line was flatlining going down and this started growing more.
Google consolidating these teams with the aim of accelerating AI progress.
So, yeah, I mean, oh, give me a second here.
BlackRock.
Oh shoot, give me a second here.
House Committee probe is focused on BlackRock and MSCI.
Never mind. Give me a second here. Weird. Some random dude walking in my driveway. It's not the guy that's supposed to be here. All right. Why not get into some puts? I mean, it's valid. Like I can see that, but we are technically we're above the opening range for NQ here, and we're above the daily VWAP and above the swing low, which is not necessarily really a bearish case. So and as you can see from the low to the high, what are we doing? We're actually just trading within those. We're pinching between these two. So I can literally break either way. But I'm just not interested in shorting it. I'm just not interested at going long right now. My position that I liked was earlier. It was the ruddy. Well, it was micro ruddy, not the full blown ruddy. And that was hit. Like I basically got out just a little bit early. But as a strong move down, I figured that we can bounce probably from around here. So I put it on last night, went up some points, and then put in my profits this morning. Yeah, there's opportunities to do like scalps and stuff, right, Condom? But let's see if anything's coming around the corner here. 9:30, coming into 10 o'clock. We have tips auction. Just everything seems heavy. So here we go. Maybe maybe we start changing here. Maybe this is going to give you a good sign. The green line's trying to tick up. I mean, there's really the divergence is really waning here. We still have bearish convergence, but hey, you never know. Like, what if this starts moving up and then the red line starts going down? Maybe that opens the door for an opportunity to break back up. Maybe. I'd rather wait for confirmation. KevDog gets a Bookmap. It's the market pricing in here. Still looking at one rate cut starting out in September so far. We'll see if we even get that or see if this changes throughout time. The Fed's hawkish comments the other day. Oh. You are living in a simulation. Okay. Let's see if we can change this up now. Let's do it. Let's get that green line pumping. Let's make this happen, dude.
Trying to bring in ConocoPhillips on a bid for a Citgo.
Let's go. A lot of volume here on this road, on this move. Here, not so much.
Also considering bids in Citgo court auction.
Yeah, you see, it's just a lot of chop right now. Sometimes when you get a lot of chop, it's easier to just go into the bigger time frames. Over here on my left-hand side is the S&P 500 using a Wanda. 30 minutes. And really, I mean, we're just getting some candles to the downside for a couple of hours, but it's not like it's really taken out too much yet. And the NQ is trading in its opening range still, which is the first 30 seconds of where the market started. We're right back there, pinching between the swing low and the swing high anchored VWAP. Market net flow, we're starting to get a bullish divergence, bullish convergence, but it's like they're so close together. It's not really a good read, unless if they start really diverging from one another. So not a good read there. Yeah, Todd, it could be different. They probably aggregate their data differently. I actually think Unusual Whales keeps in a lot of the data that TradyTix doesn't deem to be important, so they pull that data from their market net flow. Like for example, various like hedging activity they might pull from, where it's all about aggregation of data. So they might be aggregating like everything, all of it, and then TradyTix might be pulling some of that data from their calculation. That's why it looks different. I don't know the exact you'd have to ask them specifically. You go to Unusual Whales and write them a letter or write them a note and be like, hey, how are you aggregating your data? Like what is actually taking place here? Because it looks different than TradyTix, or it looks different than the hero indicator from Spot Gamma or whatever. I would try to comment on Unusual Whales, but I haven't used their tool, so I don't have an opinion. I don't know. I just don't know. I actually have the hero indicator for Bookmap. I just never installed it, so that's something that I have to do. I'm not going to try to figure that out now because I don't know, but I think that's like the same thing as kind of what I'm looking at here. From my understanding, I'm not 100% sure because I didn't really look too into it. I know I have it, but I never installed it. So.
IPO I bought IBTA now indicating 114 to 116, priced at 88. India Bravo Tango Alpha.
Chop suey, yo, chop suey. At the middle of the opening range, coming down to the daily VWAP and swing low anchored VWAP right now. There's a big flush. Yeef. Yeef, yeef, yeef. Breaking underneath it.
IBM just noting they'll offer Meta's Llama 3 open models on Watson X. Expanding portfolio of next generation enterprise.
Some pretty big volume on that break. Take a look at Bookmap, see if anything's happening there. You can see when we broke that, you have more liquidity being added in overhead there on that break. A little bit of a flush under that daily VWAP. Still adding some liquidity there. A little. See what happens, see how this works. Sometimes when you get breaks underneath these VWAPs, you get back tests, see if it holds, see what happens. We're underneath the opening range now. We're underneath those VWAPs, so.
From last Garrison, they expect 10 to 20 Boeing 737 MAX deliveries
we'll see.
This year, down from the original.
So this is kind of why I wasn't looking to trade it. And if you've got a put or whatever, look at the snapback. It's a little bit too difficult. Not a good read. Finally seeing a little bit of volatility. A lot of chop here, not a good read. Gamma Labs, let me see 0 date, see if anything's updated here. Still 50-20. 50-20 is still focused. Microsoft taking a little bit of a hit here. Take a look. Yeah, Microsoft. I mean, I'm sure the big tech, yeah, because we're looking at Microsoft is obviously the larger market cap name, so this is taking a little bit of a hit. Yeah, this one hasn't even broken its opening range, like the minute opening range. We just got a little bit of a flush there. Outside of that's going to put pressure on the market. Let's look at the larger market cap names here. Apple, also same thing underneath its opening range. This thing fell from grace. It came a nice big pop and then completely reversed. These are why you got to be aggressive on, if you play this trade, which I did, you got to be aggressive because of the downtrend. You got to respect the downtrends or the trends. NVIDIA's up slightly, still roughly around highs a day, so that's going to help support the market. If NVIDIA comes off, that's not going to be a great look. Google's just ripping right here. Google's going to hold this market together. Google and Nvidia, right? They'll stabilize things. Amazon above the opening range here for the minute opening range. Not too far away from the high of day, so that's holding up things. Meta also still holding up rather well here. Around the highs of day. It's going to be hard to actually have the market sell off hard if that's the case, people. That's just reality. Look at you get this snapback, like, you know, it's going to be hard to take out the market if you have the big dogs like that performing. You get this like fast liquidity break. None of the big players actually got tagged, except, you know, like Microsoft maybe, but the other names are just holding up. Now, if the other names go off, yeah, that's going to create a lot more volatility in these markets. But imagine this. Imagine you traded puts here, or, you know, you shorted, and then you just snap down. You're like, yeah, but then it snaps right back. That's why I like having this as a confirming indicator, because then it can hold you into it. This is giving us still more bearish vibes, but it's not like, it's not giving us much. So I keep going back to it to see if there's updates. I'll tell you if it really changes, but still, it's not giving us a good read. It's giving us a chop read. It's been giving us a chop read, and that's what we've been kind of seeing. The 30-minute candle over to my left-hand side. I mean, we have, it's early still. We're only 8 minutes into that candle. All right, let's look at SPY 15. We came into the swing low anchored VWAP, pulled in, saw a little bit of a bounce. Still nothing to really celebrate. Be nice if it closed up here, more higher up here, or even a green candle like this. A big old hammer candle would be nice. We have still 6 minutes. And if we break above the high and it was a nice hammer candle like that, you know, then maybe, hey, like maybe this is a reversal candle. Maybe we can start popping up. You know, maybe. Maybe, baby. That would be just from a price action perspective. You got more liquidity being added up overhead. They're just stair-stepping us down. Boom, added, fell down, flushed, bounced up, added more liquidity overhead. Still not a great look. Too heavy of a market to go long, too snappy of a market to go short. Give me a second here, I'm getting a... My wife. Maybe, baby. My thought here is to not trade. If it was clear, maybe so, but I'd like the market to start pumping up higher and maybe retest that week-to-day anchored VWAP at some point here. But it just feels heavy, discombobulated trade. I mean, there's always a possibility that this could be just flagging out, maybe. It's very common once you hit these weekly expected moves to just trade around them. You zoom out and it's like, oh, is it just flagging? I don't know. Yeah. Feels heavy. Feels heavy. Can't get out of its own way. Uh-oh. Why is my dog barking? Have a good day, Quantum. Yeah, we can take a look at Tesla again. Let's see here. Trade around and find out. Hey, you're welcome, Mama. We get asked about Tesla and Netflix very frequently. I'll bring them up. So Tesla, once again, like earnings is around the corner, right? So you give up your edge if you trade into Tesla. The expected move is about almost $15 as it stands right now. So we can see a snap up 15, snap down 15.
Imported inflation fast.
We're coming into a prior gap. These gaps can act as potential levels of support, levels of interest. But when you come into earnings, you're giving up your edge because it can literally, it's a gamble. It's a binary move. All right. And it's obviously in a downtrend. So any snap ups can get faded like they've been doing. I think it would be actually pretty crazy if the market's been going down like this and then earnings comes out and it follows through to the downside. I mean, that's trend continuation for you. But a lot of times they try to discount what's going to come. So maybe it comes out and the earnings are bad, and then what if it gaps down a little bit, but then rips up higher, and then it's, that's actually, bearish news, but bullish price action could be a good look. I don't know. Netflix is about to report earnings at the close. Netflix, I mean, isn't much more bullish, right? It's, bullish for the year, right? A bullish trend. But you look at the trade tab and you go over and you're looking at about a $51 expected move. So the expected move is like roughly down here to 50.60 or above at 660. So once again, like you're giving up your edge. Like it can be here, it can be more, dude. It can be 2 standard deviations. This is just 1 standard deviation. So I'm not going to initiate a new trade into this because I don't know if it's going to be, I don't know, even if it has bad earnings, it could be up here. If it has good earnings, it could be down here. You can have good earnings, it could be up here. It can have bad earnings, it could be down here. It's too binary for me to put my own money at risk. So if I were to just say, like, let's take a coin flip, I'd buy 1 share. And I'm okay if I lose or make $100, which would be a 2 standard deviation move, right? That would be my bet that against my portfolio, all right? One share. But I'm not going to take a 6% position, let alone a 2%, 3% position in a binary event like this. Tape still feels heavy. We have $15 minutes before the 5-year tip auction takes off. 1 future contract? No, I wouldn't even try. I wouldn't do it. I don't. Me personally. Maybe a micro, but not even like maybe a micro on something like that. Maybe if I was just take a random shot, but nah. We'll take a look. Yeah. Hey, what's up, Ego? Yep. We're sitting around the year-to-date anchor view offer SPY. What's up, Evan? MNQ? Yeah, MNQ would be the micro. Like last night, I put on a micro for Ruddy, which is M2K. Yeah, so yeah, SPY, if we go, yeah, we're back to the swing low, anchor view up, this swing low. I said, it looks all heavy. It looks so heavy. By the looks of it, like, and then you have, oh God, this isn't giving us anything here. And then you have people reaching out to this 50-20, 50-25 area. We're back below the daily VWAP, back below the swing low anchor VWAP for NQ. I mean, honestly, wouldn't be shocked if we come back down into this zone down here. If nothing changes, it just is what it is. Be nice to hold this, but they're selling into the moves up. They're just selling into it when it goes up. So if you go to the daily, you can look at the year-to-date anchored VWAP. It's up. You can see we're trading right at that year-to-date anchored VWAP, which means what? It means that the average buyer, based off of volume and the time, is in the green. But we're back to where the average buyer is based off of this volume. So what happens if we break underneath it? Well, it could become potential resistance, but you got to understand like the psychological shift. Think of it as yourself. If you bought here or whatever, you're buying, you're like averaging in. And now all of a sudden you're like, dang, dude, I was doing so good all year. And now all of a sudden I'm like back to break even. And all of a sudden it break even and starts going negative. Like, what do you do? Like, you're like, oh man, oh no, you could panic. Like once you see you've been up so long and then all of a sudden it's coming down, now you're going to break even. Sometimes people are like, just cut it out and lose it. And you can get quick flushes. You can see that on a larger scale too by using these anchor VWAPs. You can get some psychological shifts. If the average buyer based off of volume is all of a sudden from going positive to negative, they might be like, dude, I don't like this volatility. I'm just going to get out. Right? And it creates these opportunities where you can potentially see U-turn trades where it flushes and then all of a sudden turns back around and they might be too scared to buy. And then all of a sudden you just get this like low liquid type of just squeeze higher. Seen that too many times. Too many times. Give me 1 second. While this is alone, I'm going to charge my mouse up just a little bit more. You can see it's coming off a little bit here. Yes. Heavy trade, heavy trade. I'm going to go get my dog.
You're listening to Trade the News.
Spinetta saying disinflation is advanced and continuing. ECB will consider the level of restriction. I bought an IPO opening at $117, priced at 88. For IBTA, Andy Bravo Tango Alpha.
What's up, Evan? What's going on? Yeah, we can look at AXP too. It's quiet. Too quiet. Yeah, I had to go get Coco. She's chill right now. She's just happy, you know, happy as a little clam as the market goes back down. Puts her up 50%. Should you cut? What was your plan? And the market seems heavy right now. You can take partial profits. You can update stops. All things you can do. You got to think. So I always tell people, there's when you take a trade, there's always a second trade. So you always got to think about what your second trade is going to be. You know what I'm saying? So you should be hopeful instead of fearful that it's going to come back. People typically become fearful when they should be hopeful, and hopeful when they should be fearful. Coming back into and around that 50-20 level. It's getting a pretty strong flush here. NQ broke those daily and the swing low anchored VWAP as we're heading lower. I would imagine the rest of the market's kind of coming off too. 10-year yield's probably on the rise. It's the dollar moving up too. Dollar's holding up around highs of day, not too far off the highs of day. Kind of getting a little spike here in the dollar, breaking this little downtrend. This 10-year yield is up at the highs of day. All recipe for what's happening. Okay. 8 minutes before we get some auction. Price action continues to press lower. Gave us insight here, gave us insight here. What are we doing? We're not too far off of the weekly expected move again. Hold on. Daily. 15 minute, there it is. Right back to the weekly expected move. Okay? Very common to happen. Very, very common price action. Where you get down here and it goes up and it comes back in. This kind of stuff happens frequently. Market net flow. Increasing the bearish divergence. Okay, give me a second, people. There's somebody here. Just give me a moment. I have somebody here at the house that I gotta figure out.
SB's Panetta saying tighter Fed is empirically a form of tightness for the Eurozone. Salon Luxottica, EL in France, and post-earnings comments saying that price increases in frames will be single digits across geographies and brands, mostly in the second part of Q2. Rico Lima in France.
Hey guys, sorry, I'm working on something right now. I will be back. I'm gonna keep this going.
About 2 minutes ago, results of the Treasury's $23 billion 5-year TIPS auction. When issue head of the auction, 2.270%. Results of the 5-year TIPS auction shortly. TIPS drawing 2.242%, 41.9% allowed at the high. Bid cover 2.58, indirect bid at 78.3%, directs at 17.8%. From U.S. officials saying the U.S. will vote no on the Palestinian request for full UN membership.
Almost there, people. Hope everyone's being careful out there in this market. You can see on the book map they're still adding that liquidity overhead. Give it some time. Give it some time.
Space Panetta saying June may bring interest rate changes. TURMOIL CEO in post-earnings comments saying we've seen more acceleration of mass market in China in Q1 versus the U.S. and a slowdown of luxury.
All right, we're back. Holy macaronis, getting some volatility here. All right, relax, girl. Jeez, Coco goes crazy when there's people here. All right, let's take a look here, see what's going on. Thanks for the subscriptions there. Appreciate everyone coming in, subscribing to the channel. Make sure to follow Twitch if you're on Twitch. Subscribe to the channel if you haven't done so already. Ah, my dog is nuts. Still bearish divergence. It's been growing. Bearish market net flow. Kind of been seeing that throughout the day. Give me a second. This dog is going crazy. Okay. Oh my gosh. All right, we're trading back below the weekly expected move. How's everyone doing? Anybody trade this? More to the downside. If we pull up back to where we talked about earlier, we did see that reversal back into 50-20. Let's see if traders are reaching out further down there. So 50-20 was that put wall. 50-20 is still the put wall, but they are reaching still into that 5,000 area. So 50-20 can hold, but if this starts giving, I mean, keep an eye on 5,000. That was actually kind of where it was at the very beginning of the trading session. Things changed a little bit there. Okay, 5,000's down here. You can see that little zero date. Put that there earlier in the trading session. So if 50-20 gives way, I mean, don't rule it out. Don't rule it out. We're not at new lows for the trading session on NQ and the S&P 500. Still nothing of interest as far as wanting to trade this for me personally. Sellers keep on stepping in pretty heavily here. It's a pretty big windfall there. So take a look at Bookmap, and you could visualize that how we couldn't get through this liquidity. When we cracked, they added liquidity. When we started bouncing back, they added more liquidity over here on this bounce back. And now you can see, I mean, you added more here. They're bouncing it a little bit. They're adding more here again. It's like they're stair stepping us down. And this could very well be CTAs. Could see a lot of volume coming in. We'll know that later. Where we get these bounces and then they resell into it. Bounces resell into it.
It's daily reverse repo operation, 75 counterparties taking $433 billion.
Glenn asked a while ago, where are we at seasonality in this election cycle? Seasonality, we're at a period where we go pretty much sideways to slightly down. until like the middle of June, based off of election years. Still a lot of pressure to the downside. So, okay, so once again, if we look at market net flow, right, people? Market net flow, this entire time, right, it's been telling us, you know, careful on dip buying, right? It was no convergence here, but it also didn't give us a lot of conviction because of the bearish divergence. It didn't give us enough conviction about this rally. All right, so when this rally started fading, we started losing convergence from going into convergence, I should say. The market started kind of going down slightly, and the divergence still held. Little chop here, but then it continued to pick up and elevate in these areas. So the entire time as we were getting this rally, this right here gave us insight to really kind of be cautious in that time. And now, you know, if you're trying to buy the dip, I mean, you'd be fighting flow again. You'd be trying to swim up a river. Unfortunately, you can get lucky. You can try to tag bottoms, but the flow is clearly to the downside. And where can that be? Like, where would the target be? So when we see this stuff, I think we priorly discussed, like, when you see this convergence, you know, what's the edge? The edge is to the downside. Where can we go? We looked at 0 day, potentially 50-20, right? Now we're cracking down through that. So where can we potentially go? Well, we can go to 5,000, right? That's the market net flow, bearish convergence, bearish divergence, gamma, you know, reaching for 5,000 still. And then you go to net gamma, and that's been the put wall too. Traders reaching out to 5,000. All right, so that would be the level. Maybe of interest here. We're coming to new lows. We did hit new lows for the trading session on S&P 500. We're about there on NQ as it stands right now. Very strong move. S&P 500 well outside of the weekly expected move, almost cresting into new low territory for the week.
Turkish Central Bank Governor reportedly promising more tightening if needed.
So this refrigerator guy that came in, so we bought a new refrigerator. We bought new appliances, okay? So hear me out. Let me know what your thoughts are. We bought a brand new refrigerator in our new house. We got these upgraded refrigerators and stuff from GE. Okay, these cafe appliances. And they installed it, not GE, but the builders. So we're getting some supported bids right here. A little bit here, okay? The installers installed the fridge, the construction company or whatever, and they dented the front-facing portion of it, the bottom portion of it, and they dented the side. So basically, the refrigerator has dents in the front, the bottom, and then the side of the refrigerator. And then they're telling me, they're saying, well, you had new construction done from somebody else on their flooring. It was probably them. Well, I took pictures of this before the construction started, so I have proof that it was already beat up, obviously. Of course, I have the receipt. I come with the receipts all the time. Okay, and then so instead of so I'm entitled to a brand new refrigerator, right? We bought a new refrigerator or whatever, and it came out like this, and we told them right out of the gate before we even moved in. Day one when we got the keys, we're like, yeah, no, not acceptable. So all of a sudden, I get a refrigerator door sent to my doorstep, and I get a text message saying, yeah, the guy's going to be there to replace the door. And then the GE guy comes in, he's like, yeah, dude, I would just ask for a new refrigerator at this point. You bought it. And you're having me do this, and he's like, and they didn't order all the pieces, and I have to get this piece beneath it. And then he looked at the dishwasher, and he was like, yeah, you got to get a new dishwasher too, because they installed it incorrectly. The spring was broken, and it bent the bottom of the door. And they're telling me, yeah, dude, I sympathize with you. This is the builder. They're like, I sympathize with you, but we can't really do that. And I was like, I was like, yeah, that's not acceptable, man. So I mean, what am I entitled to? Am I entitled to a new refrigerator? Yeah, refrigerator and a dishwasher. Dishwasher, I'm not too worried about. I'm more worried about them just replacing the front. But the dishwasher, or the refrigerator, man, bro, these things aren't cheap. It's like $4,000, right? It's not a cheap refrigerator. They keep on. Look at this liquidity being added overhead. The products work. The refrigerator and the dishwasher, they work. It's just, it's a stainless steel fridge, and you can visually see dents in the front face of it, and the side of it. The side is covered because it's built in, but there's a huge dent on the side of the fridge. Get it inspected. Yeah, what kind of inspector would I get? Because I have some time to do that. I went through the house myself and I found so many things. Even the garage door had a huge dent in it. He was like, "Are you sure you want to replace that? They're gonna have to repaint it and stuff." And I like looked at him. I'm like, "What do you mean? There's a huge dent on my garage door, dude. What are you talking about? Do I want it replaced? Of course I want it replaced." It's like 4 to 5 inches, visible. And then the dent on the refrigerator is very visible because stainless steel bends a little bit, and you can just literally see it all coagulate, like the light all like intensifies in like the corners where it's all bent. Yeah, I do. Yeah. Okay, cool. So he works for Starting now. I definitely had the proof. I took pictures of it the day that I got the keys. And the person that walked through the house with me, I told him that day. But that guy quit because he said he didn't like how they were acting as a company. And he told me, obviously the guy that I walked through, the original walkthrough, he doesn't work with the company anymore, but he told me that all this stuff would get fixed and replaced. Okay, what about this? The countertops, the bathroom countertops has huge scratches. It's kind of hard to see, but there's big scratches in the countertops. And I told him that. I was like, "Yeah, dude, there's big old count." He's like, "Yeah, but the problem is if we try to get if they get them off, it loses its sheen." I said, "Okay, but we bought new countertops and there's big scratches in them." And he's like, "Yeah, it's gonna cost. That'd be probably pretty expensive to have replaced." And I'm like, "Okay, like is that just like because you guys were careless installing them and now it's my problem? Like, what the hell, dude?" Oh, they're paid. It's a pretty big builder. Yeah, I'd say it's a big builder. Still cracking lower, man. It's not Redfin, no. Yeah, get new countertop. Don't ask for them to fix it. YouTube, how to fix it. All right, we'll take a look here, seeing if we can come into the 5,000 marker here for the S&P 500. It's not too far off. New lows for NQ, getting a lot of price action to the downside, people. The Cyber Chill? I gotta look that up, see what it is. Because I'm looking at the ES bubbles for potential liquidity being added underneath us. That's why I'm taking a look at it there. Not too far off of 5,000. See how like little liquidity comes in and all of a sudden we get a little bit of a bounce. This to me just look at all this randomness coming in. This is just algos taking us down here. Very interesting price action. Just depends on the contract. I'd have to see, but I get the contract was like, the contract was you go through a walkthrough, you tell them what's wrong, and then they fix it. And you get a year to do so, and we walk through this, and I told them all of this, but none of it's been fixed.
Targeted its attacks.
They're giving me excuses
Israeli military
and saying things like, "Ah, dude, yeah, no, I get where you're coming from. That kind of sucks. It's gonna suck." I really don't want to draw it out and like into court. It's just like deal with it. Like I know I'd win a case if I had to go out to court. Yeah, I mean, we have the proof. We have the receipts. We did the walkthrough. Was there a reason for the sell-off? I think this has a lot to do with flow. It's been flow all day negative. You know, it's been a bearish divergence. Even that rally up, the rally was done because there was no convergence. It wasn't like there was, you know, market net flow was on our side, and then we started losing convergence. I think it's all to do with flow for today, which means we're probably getting, could be very well CTA sell triggers. Just more downward convexity to the downside. Trading outside now, the weekly expected move. New low for the week. Not too far off the NVIDIA gap. If we get some sort of snapback, I mean, it could happen, and it can happen very quickly. Maybe not today, maybe today, I don't know. But you'll get a lot of people get frustrated and throw in the towel. This is what happens typically. You'll get gaps up, and then people give up. Gap up, give up. Then you get a gap up, people might, or gap down, people give up, and then all of a sudden it rallies back. Get some weird price action. Yeah, sometimes, yeah, credit cards. I didn't do with credit card. See if there's a line item for punch list and waterfly. Yeah, it kind of does suck. Yeah, it is what it is, but I don't know, you buy something new, and they're like, here you go, it's installed, delivered, and it's like, dude, do you not see this? And they're like, oh yeah. Crazy. The funny thing is, I told him this prior, and then this Dorfic comes to my thing, and he's like, I'm gonna have my boss call you. And the boss never calls me because he knows he's not gonna want to deal with me. You know, he's not gonna have a good reason. He's probably just gonna throw in the towel, and he's like, I'll just do it. Let's just do the right thing. And then I asked the GE guy, I was like, let me ask you, who bites the cost if you're just replacing the door? He was like, we do. And I was like, oh, so they don't really actually, they don't have to pay for anything. They're like, no. He's like, no. He was like, we replace all this stuff. He was like, but you know, if you bought it brand new and you had the receipts for it and it was broken when it came up, he was like, why wouldn't you want a new one? Crazy. All right. A little bit of a relief bounce here. Coming back into and around the green line here, the 50-20. I don't read too much into this. These big rip your face off moves, these happen. Market net flow is not changing much here.
From yesterday, saying that there are risks for global
so
inflation.
You can tag a anchor VWAP on the swing low and kind of track that. It's a dangerous place to be trading right now.
From this Iran foreign minister saying that if there's any use of force by Israel or violation of Iran's sovereignty, Iran response will be decisive and proper to make Israel regret it.
That's a good question. I don't know if they even have a place for reviews. It's like a builder, you know, it's a check. Maybe they do. I haven't looked at that. They're nationwide builders. I don't know. It is what it is. I know it's going to get resolved. It's going to get resolved. I just find it weird that I don't know. I'm fine with them doing the dishwasher and just replacing the door, but the refrigerator, if they have to replace every single door, you might as well replace the refrigerator, because even if you replace all the doors, there's still a big dent on the side of it, which is not seen, but I don't know. Like, it's our first nice, me and my wife, we haven't spent money on this type of stuff before, you know. So we bought new stuff, way nicer stuff. Our last refrigerator we bought at an auction. You know, so it's our first time actually getting nice stuff. SPY basically flat on the trading session. Bulls did step in, put in a nice little hammer candle here on the 15-minute time frame. Just trading around the weekly expected move, people. You know, unfortunately, just no trades taken for me. Like I said, if I was more of a short side seller, this would have initiated short selling. I don't really like shorting too much. But the edge has been to the downside pretty much for the entirety of the day. Even on this rally here, it wasn't a high conviction rally. Thanks, CJ. Bouncing off the year-to-date anchored VWAP on SPY. Yeah, we've been fighting with that pretty much all day, huh? Or the last couple of days, it seems like. So see these big rallies here? You can anchor this, anchor to the bottom. Coming back into the swing low anchored VWAP. See if it actually has any sustainability. Kind of going back and forth about which one's bigger, you know. So 5,000 was the put wall there on that down move. Now it's back to 50.20. Price is below 50.20. And then market net flow is still suggesting more bearish price action. Now we're already starting to move up here a little bit. And this is coming off a little bit.
There's less visibility.
Still a little bit more position to go down. I would like to see this turn gray, and then maybe in that case, if this continues to go up and this pulls down, maybe that opens the door for, like, you know, move back through that 520 or 5,020. Just, yeah, not in a rush for this. What happened to Lulu? I did take profits. I wonder if Lulu was affected at all. Took some profits off. It's off the highs a little bit. It came out from that volume point of control, back to where I kind of took profits from. Any other charts that you guys want me to pull up over here? I'm still waiting to see if maybe something opens up. We did get some supported bids beneath us here, so that's actually kind of nice. So as we pull down, we got some support. Consolidate, got some more support here. Still bad market net flow, but at least you're getting some potential like sustainability, maybe, right? This get a little bit more there. Yeah. It's kind of just like weird. Bro, this is just the algos having a field day right now. Just a field day. Yeah, NVIDIA, let's take a look at NVIDIA. We'll take a look at PayPal. Oh, they just added more overhead there. So let's see if we can clear that. I mean, NVIDIA's not doing much. Remember on this specific day, I don't know if it was a live session or if it was a stock market brief video. Since that day, we've been talking about it, but when you get these strong moves and you get a big volume day like this and it reverses, these days, they can mark periods of consolidation, potential pullbacks, potential turning points. Doesn't mean the market can't go higher, but even if it went higher, it can still pull into these levels. And what have we seen since that day? We've literally gone nowhere. Slightly down, but really nowhere, right? Still in an uptrend, still getting choppy. Be careful because we have like down days. Down days like this has on higher volume than the prior day. Down day, 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 higher volume than the prior day. So those are all distribution type days. They would be considered more of a distribution. It doesn't necessarily mean that, it's going to sell it, or it's going to sell off and continue, but these higher volume days in the prior day, typically would mark distribution. So it's of caution, but it's still an overall uptrend. You really want to see this come back. Now, this is what I mean by when you break out and you get a lot more fake out. So we had a nice breakout of this trend line right here, but we're in negative gamma territory, right? We're below a 5-day moving average. It's declining. and it's going to revert it on its face. Lucky guess on VIX Crush Friday tomorrow? I really don't know, man. Wasn't last Friday not a VIX Crush Friday? Getting pretty tight here. Getting pretty tight here. Look for a move to fill some of this liquidity here or down here. Market net flow keeps continuing to suggest lower, but there it goes. Yeah, 5 days in a row. It's been a while since we've seen something like that happen, huh? People don't know what to do. That's the problem here is like a lot of people are getting ready to buy these dips, right? Like I get it because we're mapping out key areas. Like that 5,000 would be a key area. But, you know, who knows? Like you might be trying to buy the dip and, you know, there comes a time where you keep buying the dip and then all of a sudden keeps dipping. I don't know if that's going to be the case this time around or not. Remember, trends don't go down without a fight. Trends don't go down without a fight. So if you look at the S&P 500 on a daily time frame, or just use the SPY as the proxy, I mean, we're down, what, 5%? About 5%-ish, right around 5%. It's very common to see 5% pullbacks. This was a 10%. This was a 10% from peak to trough, but how much did it go down before bouncing? It went down 5.6% before seeing a bounce. We're not even there yet. We're about 1% off. And then on the bounce, what happened? It actually gapped down and reversed on the day to close at the, close. That's not like the most bullish reversal. It'd been more bullish if it was here, but nonetheless, it gapped down, probably freaked people out, and then it gapped up and then moved up higher. Okay. So that's interesting. And then what about this one from here down to here? About 7%. From here to down here, about 6.5%. My point is that when you get these moves, you can typically get bounces, and the bounces can very well get faded. And then these white lines, these little white lines that I marked on my screen, is actually, so this time we're in entire negative gamma territory before getting into positive gamma territory and moving. But I mapped out on the last market brief, these little dips here was in kind of like spikes in negative gamma. And so I marked it right here because we're in negative gamma. A spike. So let's actually update that chart while we're here. Let's go to here. We'll go to Gamma Lab. We'll go to time series and net gamma. So it's like this day we had this spike and it's still spiking here, just kind of like how it did here. But notice these big spikes are the ones that I'm kind of calling out. You know, boom, boom, boom. In negative gamma territory. And then we have an option expiration tomorrow, so something's going to roll off. So we'll see what happens there. Most of what's going to be expiring, I believe, is actually the 5,000. So if I go to expiration by strike, expiring this week, you get like 50% expiring. So this is actually kind of, so as price is kind of getting pinned into this area, we have some expiration taking place. So what's going to be interesting to see is our traders going to start reaching out further down, and then it's going to unpin and potentially lead to more CTA, like triggering and more sell side. That would be the bearish case there. It's not a huge expiration percent by total. 26, maybe a little bit more now, but 30% of the gamma is rolling off. Back below the swing low anchor VWAP. Market net flow has been suggesting that this would be the case. Sights are on 5,000. This takes me back to when we saw the crack of 4,200. I don't know exactly where I'm looking to get long. I think I need to just be patient here. I would prefer to get long when the 5-day moving average flattens out and just starts to turn back up. I don't mind taking some fade trades and getting a little tactical here and there. Maybe this NVIDIA gap, if I'm trading intraday. or the 5,000 level, or just maybe undercut the 5,000. It would be nice, like if we undercut the 5,000 like very quickly, but yet no one's reaching out further, and then I would say, yeah, that'd be cool for a little snapback to 5,000, or maybe pop up through it. Give me a second. Bacon. I got you, Moonrager. Yummy. Bacon in a muffin? Sure, why not? Super random, but I'll take it. All right, anybody trading this right now? Anybody trading this? Getting all intense? Look at these swings, man. Just back and forth, dude. People will chase into it and then it'll go like this. Hey! Still very bearish looking market net flow. I don't like shorting in the hole. I don't really like shorting. All right, what else do we got here? Get an attorney? Yeah, no, this is not the greatest look, huh? Let's take a look at Apple. Some of these larger market cap names. We'll take a look at some of these intermarket assets. Apple cresting into new lows after this tire pop-up right here. That was a great day. I caught this trade. That was such a nice trade. But look at the follow through, just right to the downside. You got to respect these trends. Respect negative gamma territory. Respect the declining 5-day moving average. This is what you see, a lot more fake outs. Microsoft's down 1% on the day, getting some follow through there. Nvidia is up on the day, hanging around that 50-day inclining. Google is basically at the highs of day. Amazon down about 1%, coming in a little bit. Still not farly separated from the highs. This is also kind of scary to me because like the S&P 500 is down 5% and the largest market cap names are basically at the highs. So what happens like if Nvidia just gives out? What happens if Apple gives out, or not Apple, Meta, Amazon, Microsoft? They're all like, they're not even far from the highs. What if these things give out? Like, dude, the market is just going to look like utter garbage. Financials reversed most of the move today, just pretty intensive sell side on financials. But you know what? I think that this was really to be expected given the context of how powerful this run was that we talked about. Like, it's very rare to see financials move as far as they did in as short of a time as it did. IWM, I'm glad that I got out of my trade when I did. It's reversed so far on basically the day back to, slightly up. XLU, flat on the day. Utilities, right? Dow Jones, the diamonds. A lot of sideways chop right here. You're getting a lot of gap ups and flushes, gap up and flush, gap up and flush. Not the fun type of price action we're used to. Healthcare up slightly on the day, but also getting those gap ups and flushes, gap up and flushes, gap up and flushes. Very disgusting. Look at this. Look at this disgusting price action. Ah. Look at this. Closes, opens, closes, opens, closes, opens, closes. But what is it doing? It's just drowning lower. Like that'll shake people out of positions. That's some nastiness. If Netflix bombs, will it drag? It will drag the markets lower. It may have an effect. Netflix doesn't have like a gigantic market cap, right?
Brazil Central Bank Governor saying Brazil, they believe they
like it's not like really a market mover of a name.
Malfunctions.
Like where does it fall within the S&P 100? Where's Netflix? Where are you, dude? It's down here, like in the top 30 or so, maybe more. So it's not like it has this gigantic like pull on the markets. It's like, you know, Apple, Nvidia is even more important, I think, because from an implied volatility perspective. But nonetheless, dude, if you get bearish news and already this bearish environment, maybe it triggers some moves in some other names. I get it. Semiconductors did get pretty cracked yesterday, trading lower today. Well, like, this is what happens, right? We contracted very tight after an expansion and we broke lower. We're expanding to the downside. Very, very common to see markets move between expansion and contraction. That's one of the basic principles of technical analysis. Back up to around the 50-20 area. Kind of just we undershot it. We're coming back up. Not quite getting to 5,000. Potential double bottom. I don't know. I don't trust anything here. Market net flow is still pretty bearish. Coming right back into the weekly expected move, just like we were above it. It's very common to trade back down. It's very common to trade back up. You know, it's more dangerous when we're below it, because when we're below it, if you get some crazy hedging activity, you can really start sinking off. The Qs did fill the NVIDIA gap, by the way. NVIDIA happened right here, I think, right? And then you can see it's coming into the NVIDIA gap. It's already closed it yesterday. And Qs have came off. Qs are down from peak to trough about almost 6% from that move. IWM. IWM almost came into correction territory, down 10%. It's down on the year. Nice stuff, Ruben. Good stuff. Good stuff. Good stuff. We'll bounce back on mega cap earnings. Maybe. Yeah, maybe. I don't know. That'd be nice. These times are really boring. It's literally it just really tests your patience. Well, it tests my patience, at least. What is this song, dude? Freaky. Could use a short squeeze right about now. Yeah, for sure. I'd love one. I would like a real squeeze with real buyers behind it. They keep on kind of stepping in here. Just more liquidity overhead. Market net flow is still poor. I want to trade right now. I just, like, what am I going to trade? I guess the trade would just be set it and forget it, small trade, thinking that we're going to go lower to 5,000, but do I really want to short here to 5,000? Not really. It's not really my style. I just want to be in a rocket ship, you know? The dog in the fridge test patience. Exactly. All the trendies getting trended. Trendies sound like lunch. It's funny. That's good stuff. That's good stuff. This 5-day moving average has been declining really since, like April 3rd. Maybe even a little bit more. Nah, it kind of started neutralizing here into April, which is, a warning sign in itself that the trend may be changing. And then it started declining. It's still declining. It takes a while to heal these things, right? But look at price action when it's trending up. It's great. It's great when it's going up. So it can take a while. It can take a while to resolve itself and fix itself. Still cracking lower. We're going to hit new lows for the day. I think 5,000 is in testing distance. Just looking at market net flow. It's waning a little bit here. And then gamma is let's see if that's just changing back to 5,000. Still growing. It's still main sparse at 50-20. But 5,000 looks like it's not too far off, man. It's not too far off. Market net flow is saying like we can go for it. Saying that we can go for it. I wouldn't be fighting this. Ooh, a muffin. A banana.
Making a report that Boeing seeks to bring flying cars to Asia by 2030. Bravo Alpha.
Bruh. Boeing, in the midst of all this heat, they just said that they're going to bring flying cars. Quick, we need to do something about our stock price. I don't know. Tell them that we're going to make flying cars. Is that a good idea? I don't know. Let's just do it. Say there's going to be AI involved. What's Boeing been up to? Quick, save the stock price. Tell them we're going to make flying cars. Hey. Too funny, man.
SDK report on Boeing plans for flying cars in Asia. As Boeing's developing electric vertical takeoff and landing craft at a subsidiary that they look to use autonomous technology.
Bruh. Flying
currently
cars.
considering which country in Asia to enter first, including Japan.
Like, why? Okay. Why is that even important to talk about right now? Like, why are they really launching that out? Why are they announcing it now?
Boeing really indicating that they'll try to get certification in the U.S. before expanding into Asia.
It's pretty funny. That'd be cool when they're here, you know? We'll see. But man, figure out the airplane stuff first. How about that? Figure all this. I'll figure out getting better gracious with Wall Street here and with all your customers that or airlines that fly your Boeings. Figure that out. And then release that news. I know they're sitting around a boardroom. They're like, all right, what we can do is we can give them insight and let them know that we're going to be working on flying cars. We're not going to give them much more details, but I think they're going to like this. Think about it, Tom. The average person would love to fly to work. It would be so cool. Their intern was like, I got a good idea to fix this. I don't know, man. Yeah, you're probably not seeing that on your newsfeed, MX, because I have Trade the News, and Trade the News gets very in the weeds with some of this news stuff. And some of these like meetings that they have, and sometimes it takes a little bit longer, you know. They get like sometimes it's a little bit longer to get the news feed. If it's decent news and it's going to hit the mainstream or whatever, it takes some time for it to appear on whatever, you know, other feeds. Trade the News is like live. It's a live feed, so. Ah, there you go. Yeah, you got it now. Does it have military uses? Yeah, I mean, sure it can. If you'd have residential uses too. Like, a really bad idea. Maybe they're talking about it specifically for like, maybe they say cars because people think it's like cars for me, but maybe it is just for like, maybe it's vehicles in like military use. Who knows? I don't freaking know, dude. I don't understand any of this stuff. Yeah, TOS news is great too. Trade the news you got to pay for. It's kind of expensive. Oh, all right. We're just floating around here, people. It just seems like the market is on the edge to break lower to that 5,000. Everything about this market feels heavy. You get like these moves down and then you get these fast snapbacks and then they get faded, and you get these fast snapbacks, get people excited, and then it fades. And now it's kind of just like walking this plank. You know, you get a low, a higher, a lower high, a lower high. Now it's flagging out here. Watch it go like this. It'll like overcut. It'll overcut it and then come back down like this. It's just very.
Biopath Holdings announcing a $1.2 million registered direct offering, which priced at the market. Bravo Papa Tango Hotel.
I don't trade that crap. Bravo Papa Tango. Bravo Papa Tango. Am I a Coke or Pepsi person? I don't think I've had a soda, like actually like a soda for like, I've had an energy drink, so that may fall within the category of soda, but I actually haven't had soda itself for a very long time. I'm not against it. I just don't really drink it. So when I go to a fast food restaurant or something, I always just get water. It's kind of boring. But if I had to choose between Coke and Pepsi, I've always liked the taste of Pepsi, but Coke has that nostalgia, and I like the nostalgia feel of Coke. So if I'm feeling like a soda, I think I might have to just go Coke. You know what I'm saying? Are you talking about the stock or the drink? Let's take a look. KO. Hey, check this out. Sorry, as I'm eating a muffin, it's super dry. I'm like, Coca-Cola is getting above the 5-day moving average. It's starting to flatten out here. It's starting to flag. Are we gonna see some relative strength in some of these consumer staples? It's been going nowhere all year. Let's take a look at PEP. Going nowhere for a minute here too. Also, look at these names. They're getting above these 5-day moving averages. This one consolidated and popped up higher and flagging here too. Earnings are around the corner. Wait a second, is that today or tomorrow? Or is that after? No, it's not today or tomorrow. Mexico Coke for you? Is that like in the bottle? Yeah, that's great. Coke and Pepsi taste the same. I feel like very similar, but like I feel like Pepsi has this like a little bit more sweetness to it. Maybe it's not more sweet. Maybe it's like more like less like carbonation. Like Coke is like hits me with the carb, but every time I drink those, it's like my teeth just feel gritty. I'm not much of a soda drinker. If I'm going to drink like a soda, it might have to like. It's not that I really like it, but I like the clear sodas. Yeah, I'm eating this time and not starving myself. Just a little bit of nuggets here and there, little tiny nugs of a muffin. Nice dry muffin. I'm not gonna tell my wife that. She's trying to eat all healthy, so she's making like these buckwheat muffins. It's actually not bad. It's like I have cotton mouth right now, though. I'm all dry. Oh, interesting, Tex-Mex. I didn't know that. I didn't know that there's different sugar to use. That's kind of cool. Hitting us with the news. All right, so we're still putting in a lower high here. We're under the swing low. Anchor VWAP. I mean, everything about this says I want to go lower, but it's really just kind of getting tight here. So, yeah, I don't know, man. Maybe there's an option to shorten to 5,000 still, but I'm just not feeling it. Like, I don't want to have to deal with a snap up. Like, I don't want to deal with a snap up just to maybe go down a little bit more. I'm just not feeling it. If I was to do it, it'd be a very small, like it'd be a micro. Market net flow is still very bearish. I mean, all signs are pointing to market lower. The path is always the hard part, you know? The path is the hard part. I don't think there's a healthy Muppet out there. Hey, what's up, Swing Trade? Hey, Swing Trade, I've been meaning to tell you, dude. I went to a place to pick up some beers, and I found the Revision Brewing, and I've been trying their IPAs, man. You were spot on with how good those are. They were delicious. I can't remember the exact names, but I tried there's 3 or 4 of them that I got, and I've been having one a night. The first one I had was the best, and I wish I remembered the name of it. I'd have to find out. Are we oversold in McClellan summation? Yeah, for sure we are. We're getting I wouldn't say the summation index, but in the McClellan oscillator, yeah, we're pretty extended readings. Things can stay overextended for a minute, right? But things are getting pretty extended. Now I want to show you guys another chart. This is actually pretty interesting. I posted this one on my Twitter, on the tweeter. Actually, I'm just going to update you. I'm going to get the new updated chart. See if it's updated. I think it updates. Yeah, Bookmap keeps pressing lower. Everything's pressing lower.
Last scarce thing I now see about 10 to 20 Boeing 737 MAX deliveries, down from 23 previously.
I just get a text message from the superintendent. He's like, I called my boss and he told me to send him an email told me to send an email to GE. I don't think he's going to call you. Yeah, I know he's not going to call me, dude. He's not going to bother with me. What is he going to tell me? If it was legitimately my fault on the whole refrigerator and the things, like, he would have no problem calling me like, yeah, dude, you know, it was, we have these pictures, we have this proof, it looked all great, everything was good, and it clearly happened after the fact. But he's not going to call me because I'd already sent them the receipts of like, hey, this is what it looked like when I first walked in here. He saw it, he saw them. So he's not going to call me. He's not going to deal with that. Because he knows. There's no point. So they're going to figure it out. And they'll make it right. I have no doubt in my mind that they're not going to make it right in some way. Yeah, in the past I did do the bottom fisher. I haven't done it in a while because it hasn't hit that extreme sell-off in quite some time, and that's when I like to look at it. And it's not even close to it yet either. I look at it still. I still pay attention. I'll bring it up when it's necessary. I can pull it up if you want to see it. You know, I don't mind pulling it up. If you're in the Discord, I think you have access to click the link anytime and you can see where it's at. It updates at end of day, I believe. I'm going into my signal charts here and I want to pull, what did I say? I want to pull up the 20, right? Yeah, 20. Control F20. So this is kind of cool. Make sure y'all can see it. So let's pay attention to the upper part and then I'll move after, but I'm going to zoom in so you can see it a little bit better. And I'll move it, but so this is the percent of stocks above the 20-day moving average, okay? And basically what I'm pointing out here is when it gets to these low readings, it's basically telling us, so for example, looking at the NASDAQ, it's giving us a reading of 16.67. And this reading right here is telling us that 16% of the stocks, I'm just gonna round down, round up, whatever, doesn't matter. 16% of stocks in the NASDAQ composite, which is, you know, what 3,500 names, 3,500 names, right? Only 16% are actually above their 20-day moving average. So this line has been going down, right? So as the market's been moving up, this has been declining. And now we're kind of getting into this kind of oversold territory. And if you look back to the left of the chart, when's the last time we've been here? To October, a little bit into October once, October again, into August. This was during the or the 10% correction. And then prior to that was March. So that's the NASDAQ composite. So for example, right, if I pull up the comp, I think it's this. What is the NASDAQ composite? COMP? No, how do I pull it up? Is this it? Yeah, this is it. There we go. So you can see this was kind of where it was at here. This is kind of where it was at here, right? And then in March, also right around here is when we got those extreme readings to the downside. So, and it leads to sometimes bounces in the market. And we're getting a pretty, intense sell-off where a lot of these names are selling off. So yeah, we could probably be near, potentially move there. But then look at here that you have the NYSE, 14.7% of stocks. So what does that mean? It means it also can be on the flip. You could say, 86% of the stocks are actually below their 20-day moving average, right? Look at the NASDAQ 100, 8% of the stocks. So 92%, am I doing my math right? 92% of the stocks are below the 20-day moving average. 92 out of 100, right? And if you look back to the left of the chart, we've been here in March and October a couple of times, right? The Dow Jones, 10% of stocks are above it. S&P 100, 15% of stocks are all pretty beat up. And then you have the S&P 500 down here. I know I'm blocking it a little bit, but this is a pretty low reading. You're talking 8.8% of the stocks in the S&P 500. But what's crazy too, you can look at the S&P 1500, which includes the mid cap and small caps. And when you do that, you're looking at 9.4%. So almost 90% of the stocks are below their 20-day moving averages. And if you go back through history, oversold can stay oversold for a while, but sometimes when you get these extended readings, it's near the time where you can potentially get bounces. Kind of cool, right? Market continues to kind of just stair-step down right here, stair-stepping into this area, right? There's the bulls. The bulls are right here trying to hold things together, stair-stepping down. I've seen this many times where you get an undercut, a shot up, and then it goes lower. Very pricey. Like sometimes, like very rare is it's so super clear. It's just like, oh, it breaks and then it just trends down and boom. You get like some shakeout moves. But when you look at market net flow, it's still suggesting, still there, man. It's still suggesting the trend is to the downside. Sitting roughly at lows of the day, lows of the entire week. Now we're new lows of the entire week right now in the S&P 500, probably in Q2 as it's cracking that prior low, getting into the small little bull camp here. I do have a chart with stocks below their 50-day moving average too. Not with all those names, but I can bring that up. Give me a second here. While this is cracking lower, I'll pull those up. So I'll do the NASDAQ 100. I'll just do the S&P 500. How about that? How about that? I'll do below the 50-day and 200-day. I'll do both. Okay. So this is percent of stocks. Percent of stocks. So this is the NASDAQ 100. This is the percent of stocks above the 50-day, above the 200. And take a look. It's getting pretty extended here too. So 20% of the stocks in the NASDAQ 100 are above their 20-day. So if I look back to the left of the screen, this isn't really a crazy reading. It's more crazy when it's 10%. Like even here, it came down close to it, and that was the October low. And then over here in 2022, check this out. This is really cool. See how the market actually started getting flat right here, like matching lows? Look at what Breath was telling us. It put in the low here, and then you all of a sudden get a much higher Breath reading, giving us a positive divergence that led into that rally. Pretty interesting stuff. So that's the NASDAQ 100. S&P, we are still starting to crack lower here. Buckle up, people. Buckle up. S&P 500% of stocks above the 50-day moving average is 29.2. Still not really an extended reading by any means to the downside. If you look back through the history of the chart here, you get much more extensive down in the 10%, maybe even now 15, But But nonetheless, you've been seeing a pretty sharp move there. And in the 200-day, there's still a lot of stocks above the 200-day. So we cracked this, right? What are we seeing happen right now? A little bit of chop. A little bit of chop. Traders are still, the flow is still to the downside, completely to the downside. That's where dealer flow is going. And then as far as 0-day goes, 5,000. I mean, they're even reaching out to 49.85 here, but 5,000 would be the put wall there. And then if I look at net gamma, 5,000 would be the put wall there too as well. So this would be the target. I would like to see maybe an undercut of 5,000, and then maybe that offers the opportunity to trade back in around 5,000. You know, maybe a quick undershot, boom, and it scares people out. They're like, oh yeah, see, it didn't hold the support. And then all of a sudden it like just catches back up. Don't be aggressive though.
A little more than 15 minutes now to the close of pit trading in energy markets. WTI crude futures back into negative territory at 82.11. Equities at the lows of the afternoon here. S&P minis down about 0.4%. The Dow down 63.
Prepare for war.
Cash market is testing 5,000.
All right, let's see what we can do. Prepare for battle. Come on. You know what would be probably the most crazy thing in the markets? Because now, as the market's moving down, not just today, but it's been kind of sinking down, right? The market's been coming down. Like, let me pull up SPY. I'm starting to notice now out on Twitter that people are getting a lot more bearish, rightfully so, because the market's selling off, right? It makes sense. And we're getting these gap ups and fading and so forth. But what would be crazy, dude, is everyone gets all bearish. Like now I'm getting like people are saying, oh, dude, this is it. This is where it's over. Game over. It's happening. Is if the market just freaking ripped back up to these all-time highs, and then all of a sudden everyone gets bullish again, and then it comes off. Oh, that'd be bad. That would trick so many people. I would just fake the people out. Bro, you can't make this up. What is it doing? After we broke, this is so funny. Look at what it's doing. It broke it, and it literally, why did I say, yeah, I don't really like shorting here because, you know, you can get these ripbacks. It broke it, and it literally did exactly that. It fired right back up. Now it would be even funnier if it ripped back up or whatever, how it's doing, and it comes back and breaks these lows to go to 5,000. This is what I mean by a difficult market to trade. Oh, man, oh, man. Take a look at Bookie. Nothing. I can remove this anchor VWAP. That's pointless now. New low anchor VWAP. I'm not going to even apply it yet. It's only been a few minutes. Do I believe that the market will make a all-time high before the Fed decides to cut rates? I mean, we're only 5% separated from it. So my thought process would be like, yeah, I mean, it's pretty common. I don't even know if they cut rates, if it's going to play out like it did in history. I really don't. I believe that strong stocks get typically stronger. And, you know, right now, I mean, we're looking at names that they've gone parabolic. So it's going to consolidate. It's going to be some, you know, rough riding. But the trend doesn't go down without a fight. What I find interesting is when you look at the SPY, like, it's not like it gave us some sort of blow-off move. Like, this is a reversal candle right here, how you gapped way up and closed at the low. That right there, we said, could be a reversal candle, but it would negate it if we start breaking the high. Well, and then we started bouncing back, and everyone was like, ha, 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 see? You're all worried. It's like, dude, we traded 3 days inside of it. Go watch my live streams from back then, or my market videos. I said it's very common to gap up and then trade around and contract before volatility expands. But it would be still considered technically bearish, but what would negate it is if we broke this high. So there's still obviously a lot of work. And during this process of this topping area, where we started talking about the warnings over here, March 4th, Yeah, March 4th was the warning shots. A lot of these red days were coming on bigger than prior volume. And now we're actually seeing, you know, that take place. We're seeing some sell side, but I don't know, man. I think we can snap back at some point to the 50-day, to the maybe declining 20-day, you know, and test it from there and, you know, see what it can do. I don't know when they're going to cut rates. If it's going to be September, it's not even going to be this year. But this whole rally, dude, this whole rally took place on the back of everyone saying that the Fed's going to be cutting rates 6 times this year. And, well, what happened? I mean, they were pretty much wrong. It would be a 10% correction from the high. A 10% correction would bring us right back to basically where the year started, and we'd be flat on the year. That'd be crazy. But it's possible. It's not going to be... It's usually not a straight shot, but this was a straight shot. We saw what this looks like to the up. Usually, the saying goes stairs up, elevator down, and you're kind of getting a glimpse of this because people said, no, this is an elevator up. It's like, okay, well, look at these days right here, how it wiped out all those stairs over there. You know, people don't understand. This is, you know, positive gamma, negative gamma brings in the volatility from the upside and the downside. Coming in to test this little liquidity over here. Market doing this little snapback. Back to 50-20. Market net flow is still bearish, but we're weaning convergence there slightly. And let's take a look at 0 date. 50-20 is now the bigger area. It's just between 50-20, 50-50. Sorry, 50-20 to 5,000. It's like once it starts bouncing, they go to 50-20. When it starts selling off, they go back to 5,000. Market net flow still suggests bearish. If I look at the SPY though, you know, it's common. This is common stuff to come back up to the weekly, just like it was here. It was common to come back to there. When it was over here, it was common to come back down here. We're literally just trading in and around the weekly expected move right now. Pull back up NQ. Dude, this would be crazy if this reverts back and heads lower. Talk about hard trade if that's the case. But do you see how they kind of like, how they were stepping down and then they undercut it and then you turned back up? Man, dirty. It's very common. Very common. Shh. Coco's getting mad, dude. Yeah, we might not see any rate cuts this year. You're absolutely right. Who knows? Like, you know, you will see rate cuts if something breaks.
PRFX announcing the closing of 4 million public offering that had been announced previously on the 16th of
If they're
April.
forced to step in, right? And they typically do that. Like if I show you the big picture chart, let's pull up the big picture chart and I'll show you this. It's a really cool chart. And I bring it up on occasions. All right, so this is the big picture chart. I'm gonna just hide myself. So this is showing the 10-year 3-month yield curve. When it's red, it means it's inverted. And this is the federal funds rate, effective federal funds rate. And you'll see that when we're inverted and we're in a rate hike cycle, it's actually very common to see all-time highs. So these pink lines are highlighting that we've hit all-time highs even during the times where we had an inverted yield curve and during a rate high cycle. The thing changes from historic perspective is when we start to uninvert, what do you notice? The Fed goes into the rate cutting cycle and sometimes slams rates down. And when we uninvert these yield curves and they start moving rates down, it's actually marked times where we get much more serious volatility in the markets. Multiple times. And where are we now? We're very inverted, still well off, and we're in a rate pause cycle, right? Like here, like a pause, you know? And we're talking about holding rates higher for longer. They're not really talking too much about like rising, you know, lifting them up higher. But I mean, shoot, if inflation keeps taking off, I mean, that's one of their tools. So what happens, like, okay, what happens if we uninvert this? Something breaks, I don't know, we have a credit event, and then the Fed has to step in. They're like, yep, we'll slam it back down. Let's slam it back down. Or they start to cut, and then something breaks as this uninverts, and then they slam it down. I mean, just take a look. This is what they did here. 2009, all the way, you know, basically started lifting rates back up and down there, over there. And then, come on now. And then down here, 2020, so forth, you know, to 2022, rates were 0. People got hella pumped up. Boom, boom, boom. Free money. I don't know, man. Higher for longer. That's my motto. That's funny. Let's run it back to VWAP, Trader Joe says. Let's do it. Let's run it back. I'd like to trade it. Like, there's a little bit of a trend here, maybe, that you could have watched for, you know, in hindsight. And you see this undercut. Makes a little bit of a U-turn, breaks trend, volume comes in. Market net flow. Oh, we're starting to lose convergence here, so that's something. Finally. Okay. But what are we doing? We're just coming back into 50-20. Coming back into the weekly expected move, maybe. Potentially daily VWAP here on NQ. Back to 50-20 over here in this little green box. I'll anchor now because that's a sustainable, it was a nice bounce. So I'm going to anchor now to the low, the swing low, and I'm going to fix these anchor VWAPs because I want to see what, if this swing low can be removed. Obviously, we undercut that. So the swing high anchored VWAP, and then the daily VWAP is up here, which, you know, could be a potential target. Dude, this would be crazy if it just comes all the way back up to the highs of day. Whoa, man, crazy. So as we're losing convergence, what does this mean? So it's kind of waning and losing convergence. See how it waned here, lost it right around here. When you have a bearish divergence, but you go gray and lose convergence, you could have counter trend move. So basically we had a bearish divergence all throughout here and it was no convergence and the market was, the white line was going up. It was up until here where we started gaining convergence and the market sold off. And now we're starting to lose convergence again. So that means you can have a potential counter trend move. Now this isn't really a strong edge, so you have to be a really good tactical trader given the context of that. Okay. So we're starting to lose convergence, but we're like right there. Yeah, it's not like it's not like crazy. Somewhere. One sec. How's everyone doing today? Sorry, there's not more action today. It is what it is, though. I'd rather preserve and protect the capital than throw shots for random. I'm day trading these prop firms or whatever, these prop firm accounts, you know? So it's like, it's really about surviving every day versus trying to make money. It's about like small wins, stacking them up, and then like surviving the next day, surviving the next day. That's kind of how the rules are set up, at least. I can take a look at Lily. So Eli Lilly is coming into earnings, so just be aware of that. 4:30, so end of month. And it's holding up rather well, like, right? It's just sideways price action. Here's getting a little kind of, you know, not the greatest look. And then this day over here, it looked good, but it closed at near the lows of day and it was down on bigger volume. So, you know, we're seeing distribution days. Distribution day. Distribution day. Distribution day. Distribution day. Distribution day. So you're seeing these stack up, like a lot more distribution days start to stack up. And by distribution, I mean it's a down day and it's higher volume than the prior trading day. So like entering here and you have earnings, like I don't know anything what's going to happen with earnings. Like you look out to the trade tab and just take a look at like what 15 days out or whatever it is, maybe less. I don't really know, but we're looking at like a $50. I don't know. Well, what's the day there? It's either $25 or $50. When's the expect? No, that's May 3rd. When was earnings? The 29th. So it would be this one. It would be a $50 implied move. $50.75. So you go $50. It could be right back up to these swing highs. I mean, obviously you have a lot more time till then, or it can be down, down here. Depends on wherever it's at while it comes into earnings. Initiating a new position, I feel like it's on the edge of a potential break. So I'd prefer to see this, I'd prefer to see strength happen, and I wouldn't even mind buying higher if that was the case. But I just don't like how these distribution days are stacking. I also don't like how the 5-day moving average in the SPY, and we're below it. So when I approach swing trades, even if it looks good, my position size is significantly smaller. We're running up into this liquidity that was added overhead as we started moving up here. They're stepping it up again. Take a look over here. We're above the swing low anchored VWAP. Getting a little choppy here, but remember, market F low. We did lose convergence. You can have these counter moves, which we kind of saw, but not really an edge there, okay? We're right there at about that 50-20 marker, just slightly under it. Yeah, there's a lot of price action earlier today too. Yeah, the heat map view is pretty cool. Trying to crack that swing low anchor view up. That's why I'm not trusting these moves. I think we literally drew this out earlier. I swear to you, if it cracks these lows and heads and we go to 5,000, that's crazy. You get these crazy fake out moves. Look at this volume coming in. These range of candles.
To close of pit trading in energy markets, WTI crude futures a little changed at 82.09. Natural gas trading
literally like these one little candle, a couple candles like wipe out this entire little pop up higher. Like what is this stuff? It's literally, it just feels like all sell side coming in, stepping in here and just clearing us out. Bull trapping. It's my DJ name. DJ Bull Trap. Netflix calls or puts. I'm not doing anything into earnings, but just know that if you're buying calls and puts right now, the implied volatility swelled up like a puffer fish, right? But you're looking at an expected move of $51, which I think I drew these out already. Yeah, no, it's even further down. So it's like down here, roughly there. You're roughly looking at an expected move like this. So I mean, the trend is up, right? So you think that you get continuation, but earnings are binary. They're binary, so you never really get a good... And this is just one standard deviation, by the way. One standard deviation. Yeah, you can do strangles. You can... It's all your 0-day puts. Dang it, Luke. See how when it falls right here, we're adding more liquidity overhead, and they added it again right over here. They keep on just kind of stair-stepping us down. Like everything about this tape has just been heavy all day. And then all these rallies, like they've just been, like you can sniff this out now if you have this tool. You can sniff it out. There's opportunity in this if you're fast enough. I don't got the focus and the wherewithal right now. I'm a little lethargic feeling today, to be honest.
CNBC reporting that the NBA, ESPN, and Warner exclusive TV right talks are to end on Monday. Reminder, we saw in early March, manager CEO of Disney said he was confident that they would reach an agreement with ESPN.
Oh, yeah, this just looks like crud. Like, look at, so this moved down, and then look at how it's tightening up here. Like, this one tried to expand to the upside, but like, just notice how it's kind of getting very tight here. Ugh. Careful on a break, man. This just looks like it wants to just club lower. Still. Yeah, look, man, hopefully if I did one thing today, because I didn't really do any trading other than exiting a little bit of a position and then taking profits on a overnight hold. Hopefully you just realize that this wasn't the day to fight these dips and then to at least question the rally or intraday over here. Those muffins. I'm doing all right, mystery video. Appreciate it. Slow today. I feel slow today. A little sluggish, but yeah, R. Duggan's selling condors is the best way to play earnings. Defined risk, and you get to sell volatility. I like that. Vincent, I don't know, man. Do what's best for you. Thanks, Love Set Match. Appreciate that. It's funny. I said earlier, I was like, somebody called me and like they said my market briefs are really good, but my live streams, I'm too impatient. What? Hella impatient. Somebody has to go back and clip like freaking what we just drew out here. I swear to you, we literally drew this out. We're like, most of the time it like it goes this way and snaps back up and then potentially goes like that. Like literally we drew that out. It's so funny. Now I got to go back and see if it matched it, and then I got to like overlay it and see if that's the case. Thanks for putting up with this. Hey, thanks Red 5. I appreciate it, man. Thanks, Johnny. Thanks, Thomas. Yeah, somebody else had mentioned that like, no, your live streams are way too long, and I said like I responded. I'm like, dude, people have CNBC on the background all day long. This is just an alternative to that, and I don't necessarily need to be here or want to be here like all day long. But it's if I'm here, I can go live, and what you can do is you can go back and you can say, hey, the market sold off hella hardcore. What was Mike saying during that time? You know, and you can go revisit it, and maybe then you can look at like, oh, well, he was looking at this and this, and you know, and you can learn from that. Like what, like if I said that, hey, be careful on this move up to 50-60, you know, why was he saying something about that rally up? Like why is he just not super stoked about it? Somebody asked me earlier, like, you know, what's the easy trade? And I said the easy trade is if the market net flow was going on your back, was if you were swimming down the river or swimming, you know, with the current. Thanks, Craig. Thanks, Old Testament. Thanks, Absolute Beginner. Thanks, Uni. Thanks, Conquer. And the bounce. Look at these little like, okay, so it came kind of down here. Still, now we're under the swing low anchored VWAP. That cracked. Okay, cracked it. That puts you on watch. Now it's declining. This little trend line was kind of pointless. I'll delete this. Whoa, what did I just do? 5,000 still within reach. I mean, I would like it to go to 5,000. I'd like to do an undercut because I feel like that could be a potential good trade there. Just maybe like a micro or something like that, maybe two. And then just if it could do a strong undercut, play it back into 5,000. But I might use the NQ and look at the SP 500 while that's happening.
Primera PRI putting out a press release now responding to the misinformation about the company. Papa Romeo India. And this follows the negative bear cave mentioned earlier today, which sent the shares sharply lower, but we've rebounded significantly off the post bear cave lows. Now a statement from the company saying their assertions
from Barcelona, nice,
are false.
Cheers, Dees. What do I think about the market in its current condition state with a lot of internal indicators oversold, percent of stocks, 20-day moving average, et cetera, et cetera? What do I think about that? I think that we can probably get some sort of rip your face off rally, and I think it's going to come. I think that the way that it's going to happen, and if it's going to happen, is it's going to be hard to catch. And by the move that starts it, you might be too afraid to enter in, and it could be a rip facer, and then you might want to get in a little bit later, and it could cause more volatility. The way that you safely play this is you wait for the 5-day moving average to flatten out and to neutralize to go back up. And if it doesn't, well, then you can just pretty much ride this trend all the way down, or just be careful until it changes. But yeah, with things that are oversold, I think that it's always the path of the bounce is always hard. So it could be a big gap down, and it could scare the living crud out of everybody, and then it could reverse it entirely. I think that that's pretty common. I'm watching the NVIDIA gap. I'm watching this 5,000 level. Still kind of keeps bouncing and chopping here. And remember, so also we're underneath the weekly expected move. Like bad things can happen under this, you know, but really we're just trading right next to that level right now. So there's always a high probability that we come back in. Now, if it really starts breaking from it,
of pit trading in energy in fixed income,
we only have one more day left.
Yields hold at higher levels in the wake of this morning's data. 4.98% in the U.S. 2-year. We're pushing back towards that 5% mark. The 10-year at 4.64.
Tomorrow it's a quiet day for economic data. Yeah, I got like a little Goolsby speech. Yeah, there's nothing going on, huh? I mean, really, when you think about it, we've seen a lot of volatility today, like coming off from the highs to where we are, but really we're down, 30 basis points. It's literally a nothing burger today. Cool volatility, but really, honestly, a nothing burger. Still bearish divergence, bearish convergence. Gamma Lab is giving us
second day in a row hearing from the Japanese
5,000.
Suzuki saying
they're not giving that up, man. They want that thing so bad.
Close communication.
They want 5,000
in Korea on foreign exchange.
Don't put it past them.
Echoes the reports and comments we saw to Washington D.C.
It's like I said, it's coming into the close. Like we're not too far off the close. Watch it like be the sell-off into close, like there, and then you can't really trade it. I don't know. Just look at this chart. Look to the left of the screen. There ain't nothing going on. Honestly, I might just call it a day, to be honest. And then I'll watch it from my end. If it does go to 5,000, I have to watch my kid anyway here in the next few minutes. For like an hour at least, minimum. My wife's going to a little workout thing. Red 5, man. Thanks for the $4.99, man. That's really nice of you. Thanks for supporting the stream. Keep up the good work. Love this stream. Lover of the stream. Thanks, Red 5. That's pretty cool of you, man. For the super chat there on YouTube. Thanks for the support. That's the first super chat of a live stream. That's your very first, okay, on this one, but is that your first super chat ever? That's kind of cool because it says, let's celebrate their first super chat on a live stream. So your very first one. That's so sweet. Thanks, man. Goolsby. Are we seeing some correlations between the index products? Yeah. Oh, thanks, Mad Nepali. Yeah, I do forget that pretty frequently. If you're on Twitch and you don't want to get hit with ads and you have Amazon Prime, you can sub to this channel for free. You have to go into like Prime Gaming or whatever, and just activate it, and then you just subscribe to this channel. Thanks, man. I always forget. And then you don't need to get hit with ads. Welcome, Mel. Sub into the YouTube channel. About a minute ago, JV is followed on the Twitcheroonie. The Twitcheroonie. I so want to get into a rocket ship right now. You have no idea. I want to just be in a rocket ship and I want to fly high. I want to fly so high right now. I want to go shoot off to the moons. Yeah, the path to get into 5,000 today is always going to be difficult. Like, look at this. It bounced way up and there's like, yoo-hoo, oh no, woo-hoo, oh no. Yeah, the path is always difficult. So it's like hard. Like this would be make a ideal short, you know, shorting this as there's lower highs, but then it undercuts and flips. Yeah, like who's going to hold that? Like, you know, maybe somebody, but that's why if you want to withstand the volatility, if you actually think it's going to go to 5,000, you put on a trade and basically say, you know, it is what it is. I think we're going to get there, like a micro, and you're like, I'll play it into it. If it doesn't make it, I'll just cut it at the end of the day. But you have to be willing and okay if it goes up against you to some extent. Like, I don't know how high this thing can go. Like, look how fast these rips are. You're going to be pressured. They've all been faded. So you add that, and on top of the mixture of you don't know if it's going to go to 5,000 or not. So the only way that, like, I see fit is if you have well-defined risk and you just take like a little lotto play or whatever, just like, okay, just put this on, let it go. If it goes to zero, it goes to zero. If it doesn't, or if it does, go pay out. Like I'll play into it. It's the only way that I can see trading that right now. Like where you just like straight up say, like a small shot, small risk. Small risk trades like that sometimes could pay out 300, you know, 500, maybe even 1,000%. But the unfortunate thing is these small risk, low reward trades, or these lower, higher risk trades, you know, you're going to have a lot of misses. You know, you're going to fail a lot of them. But you have to be consistent with the position size and the amount of times you approach it. Because when you approach the right one, it'll make up for all those losses and a little bit. But if you're going like full YOLO every single time, you're gonna get clobbered and eventually get taken out. And I wouldn't even say that's even a good setup down to 5,000 right now where it's at. Maybe on bounces up higher. Maybe that makes it a little bit better. But yeah. Yeah, I'll pull up Bookmap. Let's take a look at Bookity. Bookity. 50-50. You got some liquidity overhead here. They're trying to get through it, but it's a nice little open blues down here. So if they can't get it, you get pulled back down. It's some little bids here. Some little bids. 363 contracts to fill. It's not like crazy amount, right? You want 400 plus, 500 plus, trying to fill it, and you'll see if it does fill, you'll get a little pop, right, in volume. And then we would look up to 5061 would be the 5056. Yeah, this whole stuff, the blueness beneath us, it just shows us that, hey, if the buyers can't overtake this, if the demand doesn't outweigh the supply, the demand dries up, and you literally go to where you can find some demand, and you get like flushes. All right. So we'll see. We'll watch. See if we can get through it. So did you see that right there? How did you see how they just started adding supply right overhead? Kind of lit that up. Presses price down a little bit.
Bank owner Ueda saying that there's a chance we may affect trend inflation, and if so,
Bookmap
to a policy shift.
Bookmap itself is not bad. You got to also buy the data feed. If you look at like any of my YouTube videos that I post, I have a discount link. It's like an affiliate link that they give. They give like 50% off, like quarterly. They give 50% off of like the yearly for the software itself. And then they give, like, if you do the monthly, it's 20% off. Just know that you have to also buy data feed, like DX feed, separate. Bookmap software itself is not that expensive. I mean, it's not that bad for the tool that it is. Look at, like, it's market depth, right? You got to pay for market depth anywhere, for most part. Like level 2 data, not always, not everywhere. I should take that back. But this is basically this. Like, well, if I pull up a, what is it? What were we looking at? ES. Go to level 2. See this down here? Level 2 data? How it's all moving in numbers and stuff? I mean, this is basically that, right? Just market depth. And you're looking for the big orders and big orders to hit the tape. The thing is, I can read this much better than I can read level 2 data.
Many said the bank trans policy change did not cause much disruption.
So they kind of filled it right here. Got a big, nice little volume pop there, but it's like they still keep at, they keep stepping in here. You see that?
And many counterparts voiced relief that the shift did not cause disruptions in the markets.
Then they're kind of adding down here. They just added a little bit more here. Still, look, they're adding more here. They're adding more here. It's growing in size. Is it ready? Oh man. You want to go throw an outfit on really quick?
No, I gotta go get my
Okay.
socks on.
Okay. Hello, little tank. Hello, little monster. Ugh. Ugh. Dad duty. Dad duty. All right. I might have to call it a time here. I don't really see too much going on today, people. You can see buyers have been really stepping in close to this 5,000 level. But we haven't got there yet. Still trading underneath the swing low anchor VWAP. Hey, dude. No. How about now? Coco's getting mad. Hey, Bubba. Little tune. See you, Daniel. All right, guys. I'm going to call it quits for the day. You know, not much going on today. Nothing. Like, it's just sellers are there. Price lower. It's high. You know, always a high probability that we come back into the weekly expected move. Just got to be careful under these levels. Traders continue to reach out to 5,000. Let's go back to 0 date and see. Yeah, they're reaching there. Oh, now going back to 50-20. It's a little bit of a mixed tape. You know, I didn't fire off any trades today, unfortunately. I didn't fire off any new trades really yesterday during the live stream. Just keep your head on a swivel and just understand that we are in a negative gamma environment. This is very normal price action in a negative gamma environment. Gamma flip lines up there at 5170-ish right there. Okay? And then we're below a declining 5-day moving average. It's all about patience and just being able to withstand this volatility. And this is where the real skill comes in. All right. Thanks everybody for tuning in. Take care, 69. Thanks, care, Enex. Thanks, Trader Joe. There's a big flush hit. Sheesh. See you, Ponzi. See you, Gianni. See you, Snowflake. See you, 1329. Vincent. Everybody, Colby. Dumb check. See you, Mad. See you, Trader Joe. See you, Moonraker. See everybody that I missed. See you, Glenn. David Young. EJ. DY. Alrighty. Toodle-oodle. Say bye. You see his little hands popping up? Wait. Little hands reaching. Bye. All right. Thanks, FT Trader. Appreciate it, man. Thanks for coming in. See you guys.